Hello everyone, welcome to Global Online. This is Dr. Swati is here. So student who are preparing for the MSc June 2025 preparation, especially for the management subject. So here we are back with our full syllabus mock test we are going to be discussing over here. Here we are discussing top most 100 most expected MCQs which I have expected in your question paper. So let's start student without delaying our time. So first question which is in your screen student, so look over here. First question, that is formulating and executing human resource policies and practices that produce the employee competency and behavior the company need to achieve its strategic aim is called. Okay, so option is giving to you, that is strategic human resource management. Option second, strategic human resource planning. Option number 3, that is strategic human resource auditing. Fourth one, strategic human resource evaluation. So student, first of all understand the question. Okay, this question is talking about formulating and executing human resource policies. Okay, whenever we are studying about the human resource policies, this is actually involved not only the policies along with the practices that produce the employees competence and behavior. So actually this question is about the human resource policies and practices the company need to achieve its strategic management. When they give the focus on the policies, human resource policy, so these things we are study in the strategic human resource management. So in the strategic human resource management, it's involved aligning human resource policies and practices that company strategy goal to ensure the employee possesses the skill and the behavior which is needed by the organization to driving the organization's success. Okay student, so that's why the right answer for this question is option number 1 student. So student, here you are not getting the answer, you are getting the complete complete explanation over here. Okay student, as you know student, we have a less time to prepare well for examination. That's why Global Online providing you a very good opportunity to prepare yourself only in 30 days in 30-day crash course. Student, generally this course fees is 8,000 rupees, but due to limited validity the course is available to you only in 4,000 rupees if you register yourself. And student, you register yourself for the paper 2. Paper 1 is free of cost for you student, and this offer is only for 2 days students. Okay, and this is for only Tuesday. This offer is valid only for the 2 days, and this is for the Tuesday and Wednesday students. If you have any queries, so WhatsApp contact number is given to you. You can get in touch with this WhatsApp contact number. Okay, in 30 days you will complete course you will get over here in crash course format. Okay, and complete video note, your notes you will get over here. 20 plus mock test is available. PYQs with detailed explanation you will get, and the MCQs PDF you will get over here. Okay student, so how to download the Global Online? Just go to Google Play Store and register with a mobile number. Then you have to go to my course section and search the MHSET Paper 2 Management. So you will get offer over here, and this offer is only valid for the 2 days, Tuesday and Wednesday students. Again I am repeating, Tuesday and Wednesday. Okay, and this is a great opportunity for you. Okay, what you will get over here, so you can see unit wise folder is available to you only for the paper 2 management. Here you can see the unit wise folder, recorded sessions and the video lectures, live lectures, notes, mock tests, PYQs, all things is available in the unit wise folder. Okay, and this will be helpful for you. It's not only for the paper 2, it's also for the paper 1 student. Okay student, now moving toward the next question we have, that is which of the following institutions are providing the microfinance services to the poor? Okay student, so here option is that first option is conventional weaker section leading bank. Option number B, microfinancing institution. C, self-help group bank, link program, Exim bank. So student, okay, and this question is from the international business. Okay, Now first option, that is your conventional weaker section leading bank. So actually this bank provide financial services to the targeted weaker section society. Okay, and this include loans for the low income individual and the small businesses. Now the next one, that is microfinance institution, IMFI. IMFI are the special institution that offer the financial services like a small loan and saving options to the poor. Okay, and that is enabling them to start a small business and improve their livelihood. This is for the microfinancing. When we are talking about the self-help group banking link program, so this program will help to the banks to provide a financial services to underserve the community and provide the saving and the credit facility for the economic empowerment. Now Exim Bank, so Exim Bank is focused on the facilitating the international trade, and it is not involved providing the co-financing services to the poor. Now which bank is help? So you know that Exim is not our option, so D you can easily eliminate. Okay, D you can easily eliminate. So what will be the right answer? Option number A, B, C. This all the banks helps to the poor. Okay, and they give the great services to them. Okay, isn't it? So option number 4, that means A, B, C will be the right answer. Okay, moving toward the next question. The structuralist theory of inflation was proposed by who? Proposed this theory? Option number 1, option number 2, option number 3, and option number 4. Strinten, P. Strinten, G. Medal, okay, V. N. Pandit, Milton Federman, and Fritz Matchup. So who gives this theory? So structure theory of inflation was propounded by option number 1, and this theory attribute inflation, okay, and to structure the factor in an economy such as like your supply, bottleneck, next, and rigidities rather than just two monetary factors. Okay, so right answer will be option number 1, student. Okay, moving toward the next question. What is the brief among pluralist regarding the conflict in organization? Option number 1, conflict is unnecessary and should be avoided at all costs. Conflict is necessary and should be ignored. Conflict is necessary but it can be managed and resolved. Conflict should be eliminated through the restricted rule. Now what is about the question? So this is the pluralist regarding the conflict. So pluralists see the conflict in an organization as a natural outcome. Okay, this is natural because so many persons are involved over there, so they all having the different mentality and different background. So this is they see like the conflict in the organization like this is a natural outcome of, and this natural outcome is deserved interest among the employee and the management. So they believe that the conflict is not necessarily harmful and can be productive if it managed well. Okay, if you manage this well, it's cannot lead to unproductiveness, and it's not need to be opposed to the organization. Okay, and effective conflict resolution strategy are essential to address and balance this differing interests for the organization harmony. So as I explained, you can easily mark the option number 3 will be the right answer, because conflict is necessary for the organization, but if this conflict you have that ability, the organization have the ability to manage this conflict and resolve the problem, this will be a very helpful for the organization. This is a natural outcome. Okay, so that's why option number 3 will be the right answer, student. Okay, then moving toward the next question. Match the pair. The name of theory is given to you and the propounder is given to you. So first theory of opportunity and the innovation. So opportunity and the innovation, this theory is given by the Peter Drucker. Now what he said in this theory, he's give the emphasis on the innovation as a key element for the entrepreneurship development. So see the just work on the opportunity, see everything which will be changes in the life and in the organization, that you have to see as a opportunity, and innovation is play a very important role in the entrepreneurship, for the entrepreneurship success. Okay, so this is given by the Peter Drucker. Now the theory of profit. So as you know student, that is theory of profit is given by the Frank Knight. What he said that the concept of risk and the uncertainty as a basis of profit in the entrepreneurship. Okay, so the theory of profit is based on the how much risks you are taking and how much uncertainty which is involved. Okay, so all of these the theory or the profit the entrepreneurship is will get through this. Okay, so this is what the option number B. Option number 1 will be the right match with the B. Now the theory of entrepreneurial supply. Theory of entrepreneurial supply is given by the Thomas Condren. Okay, Cron. Okay, the theory of entrepreneurial supply. So this theory of entrepreneurial supply is examined, and he's stress on the culture and on the social factor which influence the supply of entrepreneurs. Okay, so this is given by them. Then the psychoanalytic theory. Psychoanalytic theory is given by the Sigmund Freud. Okay, and he said that the psychoanalysis to understand the motivation and the personality trend that influence the behavior, and this behavior include the entrepreneur's tendency. Okay, so according to this which we have matched, the right answer will be option number 2 will be the right answer students. Okay, moving toward the next question. Assertion is giving to you. The assertion is about the proposed dividend is shown on the liability side of the balance sheet. The reason behind is given that the proposed dividend cannot be distributed unless it is approved in the annual general meeting. So first of all student, you have to know what is the meaning of the proposed dividend. So proposed dividend is the dividend amount which is recommended by the company to its shareholder, but for the approval. Okay, but this proposed dividend is proposed by the company, but it's depend on the shareholder, either they accept that proposal of dividend or either they reject. So this is your proposed dividend. Okay, so the first statement, that is proposed dividend is shown on the liability side of balance sheet. Yes, it is true, because this is a dividend, this is a liability for the company, but until and unless shareholder will not accept this proposed dividend, you cannot write this proposed dividend on the current liability, in the section of the current liability, because until and unless the shareholder not get acceptance. Okay, so this dividend is considered as in the out of the box of the current liability, but you have to write this proposed dividend on the liability side of balance sheet. So this is true, but if they specifically mention over here you have to write in the current side of liability, in that condition it will be wrong. Okay, so you have to answer, you have to evaluate the question like this. Okay, so hi Samiksha. Okay, if you have any query you can ask me. Okay, and try to answer the question. Okay, now the reason is given behind. So yes, assertion is true. Okay, but the reason is given that proposed dividend cannot be distributed unless and until it's approved in the annual general meeting. So yes, both the statements are true. That is, proposed dividend cannot be distributed unless and until this is the annual general meeting is annual general meeting it is accepted in the annual general meeting, it is decided in the annual general meeting. Okay, so yes, both the statement are true over here. So both the statement are true, and they correctly explain in the annual general meeting. Okay, correctly explain the reason. Okay, now so here is the explanation is also giving to you. Two statement is giving to you. The first statement is that statement number 1. This is continuation of a business entity as a going concern is a pursued as a basis for financial reporting unless and until the entity's liquidation become imminent. Second statement is given, cash basis consider the revenue are realized when the goods are purchased. Okay, so the both statements are given to you and they are not connected with each other. Both statements are different from each other. You have to evaluate which statement is true and which statement is false. Okay, so here you can see, do state that continuation of business entity. First of all, what do you mean by the business entity? Business entity principle, you know that this is the accounting principle. Okay, and this business entity concept say that business is separate from the owner. That means business is a different entity and the owner who run the business, the person who run the business, the owner are two different entity. Okay, and going concern say that is assume that the business will be continue operating indefinitely, not be liquidated, and its asset are value based on the ability to generate a future income. So that is your going concern. So statement is continuation of a business entity as a going concern is presumed as a basis for the financial reporting unless and until the entity liquidation become imminent. So isn't it true? Are you think that this statement is true? Yes, the first statement is true because in the business entity concept and going concern is a continuation presume that basis of the financial reporting. Okay, unless you are not going to be liquidate this. Okay, the next statement is about that is a cash basis consideration. Cash basis consider the revenue are realized when the goods are produced. When we produce our goods, then we realized our cash. So isn't it then we at that condition we realize the revenue? Isn't it true? So this is a false statement. Okay, so according to this option, the statement number 1 is true, and but statement number 2 is false because the cash basis accounting recognize the revenue only when cash is received, not when the goods are produced. Okay, production of goods, producing of goods is a different thing. Most of the time whatever we are produce is not sell out, or we not get a cash from that production. Okay, so producing a goods is a different thing, and receiving cash is a different thing when we are sell out that goods and services. Okay, so this is the next one. Assertion and reason is giving to you. Now here you can see assertion, for a large business concern, an auditor instead of checking detail of all the financial transaction has to take up test checking based on some statistical sample techniques. Reason is given behind of that, when the volume of work involved in working is large and a detailed verification of all the financial transactions can be produced by adopting the test and checking on the basis of statistical sample techniques. Okay, so student, here you can see when the business is concerned with the large data, when the transaction is the financial transaction of that business is having a very large data in a very huge amount. So in that condition, you calculating one by one transaction and taking the entry of one by one, so it will going to be difficult to calculate in this way. So in that time, when we have a large data to see the financial position, financial transactions, so auditor in that condition, auditor use statistical sample techniques, because it is easier to calculate the data, large data. So yes, this is assertion is true. And what is the reason? When the volume of work involve the large, so yes, when the volume of work is large, so they adopt to check their value and they adopt to check the financial transaction with the help of statistical sampling techniques. So this is exactly the both assertion and reason are correct, and they correctly explain the assertion. Okay, so here they clearly explain that assertion, that test checking is used specifically because of large volume of transaction. When we use statistical analysis test, when we have a large sample generally, okay, non-random sampling, non-parametric test especially. Okay, now the next question, assertion reason is reasons question, that is, first assertion is giving to you, ratio analysis is one of the tool employed to know the financial health of concern. So yes, ratio analysis, why we calculate, why we study the ratio analysis, because ratio analysis help us. This is a financial statement tools that assess the financial health and performance of business. Actually, it's help to the shareholder, or not only the shareholder, to all the stakeholders. And so the stakeholders, this helps to the stakeholder to calculate or to know the liquidity of company, to know the profitability of the company, to know the solvency and efficiency of the company. So the ratio analysis helps to the stakeholder to know how the financially healthy a particular company. Okay, so yes, this statement is true. Then the ratio analysis is not the only technique available to take a investment decision. So yes, ratio on the basis of ratio analysis, this is not only technique with the help of we decide a investment decision, because there are so many techniques is available, like your cash flow analysis. Okay, like your trend analysis, what trends is in the market, so trend analysis help them. Then the comparative financial statement, when we make a comparison between the statements, so the comparative financial statements help to calculate or to evaluate the financial health of a company. Okay, so these are, so reason is not true, but the assertion is true. Okay, so here the right answer will be, what will be the right answer? Both other statements are true, but both other statements are true, but they are not exactly explained the assertion. Okay, so ratio analysis is not only, yes, this is true, not only, there are many techniques, so it is a true. If we said only techniques, then it was false. Okay, so this is true, but the reason is not exactly explain the assertion. Yes, now the next question. Next question, that is assertion. Again, I have taken many questions belongs with the assertion and reason, because many of time we get confused in this kind of question. So max to max we solve this kind of question, so it will help us to making practice of this question, so it will be help us. Okay, so next question, the financial statement prepare on historical cost basis result in erosion of capital in long run. Isn't it true? Then reason is given behind of that, the maintaining the book of account as per current purchasing power technique only may contain the inflationary pressures. Okay, so assertion and reason. So assertion is given, the financial statement is that the financial statement prepare the historical cost basis do not account of inflation. Yes, because it's not account of inflation. Over the time, this result is an the understanding of asset value and lead to capital erosion. So as the real value of money decreases. Okay, so this all has happened in when the financial statement on the basis of prepare on the basis of historical cost, because of historical cost. It's not historical cost do not give the exact amount of inflation. What is the inflation rate? Okay, so the over the time this the value of the asset is going to be undervalued. Okay, so asset value is under, because we have consider the historical value of the asset. So that's why it's result erosion of capital in the long run. So yes, this statement is true. Now the second is given to you, that is maintaining book of account as per the account purchasing power technique only may contain the inflationary pressure. So in the current purchasing power technique, accounting adjusts for inflation and help maintain the real value of capital. This current purchasing power technique ultimately help to calculate or to evaluate the real value of capital. Okay, and it's this is not only method. Okay, so over the technique is current accounting, that is CCA, that is current cost accounting, is also used to calculate the inflationary pressure. Okay, so assertion is true and reason is also true, but it's not fully explained to the assertion. Okay, so yeah, that's why the option number 1 B is correct over here. Okay, yes. The next question, that is a situation in which number of competing firm is relatively small is known as, where in which firm the competitions are relatively small as compared to other firms. So option is given: oligopoly, perfect competition, monopoly, or monopoly. So what in the perfect competition there are many firms. Okay, if there are many firms, that means there are a large competition. Okay, that means there will be no market control. That means anyone can get entry in the market and anyone can get exit from the market. So this is a perfect competition. What about monopoly? So monopoly is the one that dominate the buyer. Yes, that one that dominate to buyers. Okay, that is your monopoly. And what is a monopoly? So in the monopoly there is only one seller in the market, and that seller dominate in the market. Okay, he having a dominant position in the market. So what the question? A situation in which the number of competition firm is relatively small. So in the oligopoly, the number of competitors is small because there are few sellers in the market. Okay, but this firm has significantly control over the price. You have to keep in mind that control over the price and often engage in the strategy decision making. Okay, so yes, the option number 1 will be the correct answer, oligopoly. Yes. Now next question, match the pair question. This is match the pair question. So here list 1 and list 2 is given to you. First, economic of scale, economic internal, external economic, internal economics. This is wrongly typed. Economic external, economic internal economics, then economic of scope. Okay, so what is the economic of scale? Economic of scale you have to match with. So first of all, economic of scale, the meaning means lowering cost of production by producing in a bulk. That means this is matched with your Second, mean lowering cost of production by producing in a bulk. That is your economic of scale. Okay, and economic of scale, this you have to keep in mind. You know that economic of scale is occur when increase in the production, when your production process is increases. So when your production is increases, okay, in that condition it's lead to the lower average cost. Yes, because you're increasing your unit of production, so it just helps to lower the average cost due to the factors like a bulk purchase, bulk specialization, increase the efficiency and improvement. So that's why this is the economic of scale, means lowering the cost of production by producing in a bulk. Okay, now what is the internal economics? So internal economics arises when the cost per unit depend on the size of firm. Yes, so internal economic is based on your arises. This internal economics arises when the cost per unit depend on the size of firm, because internal economics are cost saving, having the advantage of cost saving. Yes, it's having the advantage of cost saving. That's with the help of that individual firm experience at its experience is to expand the financial transaction, to improve the managerial decision, to improve the technical things. So this will help. So this is arises when the cost per unit depend on the size of the firm. Yes, then the economic external, you can say external economics arises when the cost per unit depend on the size of industry, not the firm. Okay, so you know that the difference internal, that means this is a firm, so internally this one and externally. Okay, so here you can see external economic benefits all the firm in an industry due to some factors. These factors like your better infrastructure facilities, better supply chain, better networking. Okay, and you have a skill pool of managers, skill laborers, okay, employees. So this is the external economic. Okay, now the economic of scale, you have to match with this one. Now economic of scope. So economic of scope arises when the lower average cost of manufacturing a product when two complementary products are produced by single firm. Okay, so economic of scope occur when the firm produce multiple product, when firm produce or industry produce multiple product in the market. Yes, and which is efficiently used in as a share resources. So this will helps to reduce the cost. Yes, so this is your economic of scope. So yes, you have match first with the second one, so these options is going to be cancelled. Then the second one B with your third one, so yes, option number C will be the right answer. Understood? Now the next, this one, the option number C is right. Yes, this explanation is given to, I will provide you this PPT, this PDF after the end of the session, okay, in the group. Okay, yes. Look, the next question, that is statement number 1 is given. Point price elasticity of demand in terms of marginal revenue MR and average revenue can be measured with the following formula. So if you know what is the formula of the marginal revenue and average revenue, you can easily get this. So this question, this is belongs to the question of this question belongs to the economic. Okay, so the point price elasticity of demand, in the point price elasticity of demand can be expressed by using average revenue and marginal revenue here. So which formula? ED, elasticity of demand with the help of average revenue divided with your average revenue minus marginal revenue. So this formula derived from the relationship between what your marginal revenue and with your with that is elasticity or in the your imperfect competition scenario. Yes. So in the second statement, so first statement is true. Yes, in the price elasticity of demand, there MR, here we see the relationship, we calculate, we measure the MR's relation with your average revenue. Okay. What is MR? Marginal revenue. That means what additional you are getting from if you add 1. Okay, so that is your marginal revenue. Then the statement number 2, the point price elasticity of demand is the product of the slope of demand function and the ratio between the corresponding price and the quantity. So here you can see in the price elasticity of demand, the product of slope of demand function. Okay, so for the slope of demand function, the ratio of price to quantity. So here what formula? ED, here I can write the ED, elasticity of demand, the demand of quantity divided with the price, multiply with price divided by change in quantity, change in price. This is change. Okay, this is a change in quantity divided with change in price, multiply with price divided by quantity. So this is a standard mathematical formula for the point elasticity of demand. So yes, for the point elasticity of demand, in the product of the slope of demand function, the ratio corresponding to the price, here we consider the price and here we also consider the quantity. Yes, so this formula, with the help of price and with the help of quantity, whatever the changes we have seen over the period of time in the price and the quantity, you have to multiply these changes with the real price and the real quantity. So yes, both the statements are correct. Yes, in the point elasticity of demand, we make a comparison between the marginal revenue and the average revenue, and in the point elasticity of demand, the product of slope, if you want to calculate the slope of the demand function, in that for that way, because the demand function is made with the price and the quantity demanded. So with the help of price and the quantity demanded, we calculate our point elasticity of demand. So yes, the both statements are true over here. Yes, so both statements are correct. Here is an explanation. Now I will give you this PDF, don't worry, in a group. Okay, in our WhatsApp group. Yes. Now the next one. Next question is assertion. Again assertion and reason, but I know this is going to be a very harder or very boring when I'm taking every question of assertion and reason, but trust me, assertion and reason, this kind of question they ask next in a June attempt. I know, I'm sure that they ask this kind of question. They make a maximum question pattern in this way, assertion and reason, on the basis of assertion and reason. Okay, so just we are doing a practice. Okay, now here the assertions is given, the profit is a reward for innovation. Isn't it true? And the next statement is given to you, that is the interest is reward for the postponing consumption. So what is it true? Yes, the first statement is true. The profit is a reward for the innovation, because actually this particular statement is given by the person, that is Schlemchter. Okay, he gave this statement in his theory of innovation. Okay, and the profit is reward of entrepreneurs innovation. He give his theory in the theory of entrepreneurs innovation. So entrepreneurs introduce new product in the market. Okay, and gradually he improve his production process, then it create a new market which give us positive effect to the product. Okay, and lead to temporary monopoly profit, because if anything newly introduced in the market, it create a profit. New innovation always create a profit, but this new innovation is always create profit. When I said always is applicable only when this innovation is actually beneficial for the society, beneficial for the person. Okay, in that condition. Now the reason is given, interest is reward for the responding postponing the consumption. Here you can see this statement and this statements are both statements are not matched with each other. So we know that first thing we are sure that R is not a correct explanation of aim. But now the second statement, R isn't it R is correct or not? So let's check. Interest is a reward for postponing consumption. So yes, this is true, because according to the time preference theory of interest, okay, this one is given in the time preference theory of interest. Individual prefer present consumption over the future consumption. They want a consumption in a present day, not in a future day. So the interest is compensation for delaying your consumption. Okay, so this is allowing the fund to invest or loan out. So this is the interest is reward for postponing the consumption. Yes, because you are carrying that consumption for a long period of time. Yes, so this is yes. So reason is not correct, but both statements are correct. So here option number 1, no, option number 2, because is not correct. No, yes, they are not correctly explained to each other. So option number B is correct, that assertion is true, reason is true, but reason not exactly or explain or correctly explain the assertion. Yes. Now the next question, that is the statement is giving to you. There are 3 statement is giving to you. You have to evaluate which statement is true, which statement is false. Okay. First statement, at a point of SATI. SATI means maximum satisfaction. Okay, SATI means where you will get maximum satisfaction. Okay, so at the point of SATI for a commodity, D, marginal utility is negative. Oh, isn't it true? Marginal at a point of satisfaction. Here you can see I'm drawing a diagram. You can easily match with this. Okay, this is your total utility and this is your marginal utility. Okay, the point where your marginal utility is at the point of 0, your total utility in the point of his is in his maximum level. That means when your marginal utility is 0, in that condition your total utility in his maximum point. That means a customer or consumer in that particular point get a maximum satisfaction. Yes, so this statement is saying at a point of SATI, that means maximum SATI, this point, in this point you draw this like this. Okay, so in this point he say marginal utility is negative. Never. In this point, when the consumer in his maximum level of satisfaction, marginal utility will not be negative, it is 0. Yes, so this statement is false one. That means statement number 1 is false. Okay, now the statement number 2, a rectangular hyperbolic shaped demand curve on all its points has unequal slope and equal point elasticity. In a rectangular hyperbole, what do you think? What will be the right answer for this question? You have to mark. Let's see over here. Here you can see a rectangular hyperbole demand curve on all points has an unequal slope and equal point elasticity. So yes, this statement is true because it rectangular hyperbole represent the unitary elasticity of demand. Unitary elasticity of demand, that means if you increase your price by 10, so it decrease your quantity also by 10. If you decrease your quantity by 10, it increase your quantity by 10. So that is your unitary elasticity of demand, that is a rectangular hyperbolic. So in the rectangular hyperbolic curve, points has unequal slope but equal point elasticity. So yes, this is true. The slope of curve vary but elasticity remain constant. Here you can see your slope of curve is flexible, but your point elasticity, this one is static, this one is remain constant. This will not going to be changes. So this is a true statement. Okay. Price skimming, next statement. Price skimming is a strategy by which a firm change the lowest initial price and then increase it over time. So isn't it true? In the skimming, the strategy by firm is changing lowest initial price. In price skimming, company said, or the strategy is used in skimming. They charge highest price in initial price, then gradually reduce its price. So this is also false statement. So here statement number 1 is false, and third one, C1 is false. Only B is true. So option number 1 will be the correct answer. Clear? Yes. Next question is match the pair. It's also again from the economic, again this question from the economics. Okay, so look over here, that is perfect elasticity, where I drawing the perfect elasticity, that means this one. Your price elasticity is equals to infinite. Okay, that is your perfect elasticity. So you can match, this is not y, this is infinite. Okay, so you have to match the perfect elastic with the fifth one. So option number, either it's option number C or either it's option number D. So we can easily cut option number B and C. You can use elimination method, okay, in this kind of question when you solve this kind of question. Then perfectly elastic. So perfectly elastic when your price elasticity is equals to 0. Yes, is equals to 0. That means your quantity demanded is static, that means it remain constant, but your price is going to be changes. Okay, so this is your perfectly inelastic, so it's equals to 0. Then unitary elastic, you can easily match unitary elastic with the 1. Unitary is equal elasticity where your elasticity is equals to 1. That means if you increase your price by 10, your quantities also increases by 10. If you decrease your price by 10, so quantities also decrease by 10. So that means your E is equals to 1. That is unitary elasticity. Then elastic that means there is a more movability. That means if you smallly change, if you take a little bit of change in your price, its largely affect, is majorly affect to the quantity. Yeah, I can draw this. If I change, this is my actual price and quantity. Okay, if I change a small, if I take a small changes in price, okay, if I increase the price, if I okay, this is a if I increase a small price, my quantity demand is going to be down in a large amount. If I decrease a small price, my quantity demanded is increased with a huge amount. So this when we draw this like this, so this is your elasticity. You can see the changes of huge difference in a price and a quantity. Okay, that is your elasticity is greater than 1. Okay, there is a small changes in price, there is you can see a big change in the quantity demanded. Okay, and in elasticity, that means if your, that means nothing, that means you can see there is an elasticity is less than 1. That means if you increase your price, I increase by here little bit, increase in quantity, decrease in quantity. If you decrease your price, a little bit decrease in quantity. So there is, if there is a small changes, you can see a very rare changes in the quantity demanded. So that is your inelasticity of demand. Okay, so this is you can match with elasticity is less than 1. So what will be the right answer? Fifth, A is fifth, B is fourth, is same. Okay, and D and the property of second, that is elasticity is greater than 1. Okay, so yes, option number C will be the correct answer for this question. Okay, you may solve in this way. Here is explanation is also given to you. Okay, now select the correct answer. When goods is used for multiple purpose, then demand for these goods is called as direct demand, multiple demand, composite demand, joint demand. So what do you think, what will be the right answer? What is asked? First of all, what he is asked in the question, when a goods is used for multiple purpose. Okay, this suppose one kind of goods we use that particular is for the multiple purpose, like milk we use milk for making the curds, you can say dahi. Okay, curd, then buttermilk for getting ghee. Okay, so these are, if the goods is used for the multiple purpose, then the demand for goods is called as direct demand, multiple demand, or composite demand, or joint demand. So this kind of, if we use a particular goods in a many things. Okay, so here this is your composite demand. Composite demand is refers to the situation where single goods are demanded for multiple purpose. Like with the use of milk, we can make a cheese, we can make a butter, we can make a yogurt, we can make we can either directly consume the milk. Okay, so this is, so here right answer will be composite demand. Okay. Next, cost incurred because of new decision taken by management. Okay, because in the firm, management take a new decision. So because the management take a new decision, new cost is arises. So what is that cost? What is that cost? Isn't it sunk cost? Isn't it variable cost? Isn't it fixed cost? Isn't it incremental cost? Okay, because your management take a new decision, that means which is added, the additional, you can say this is the additional decision. Okay, so this if this is the additional decision, that means it is the additional cost. Okay, isn't it? This is the additional cost, that means it is nothing but your incremental cost which is incurred due to new decision taken by the management. Like if management want to launch a new product in the market, to expand the production capacity, to enter into the new market with a new product, so this kind of decision if taken by the management, so the cost is incurred by them, it is called as incremental cost. Yes, now the variable cost and fixed cost, these are the daily levels cost that we include. Okay, variable cost, we have to whatever the daily expenses we have, daily overhead expenses we have calculate, and fixed expense fixed cost like your rent. Okay, whatever the rent, go down rate you are paying, light bill you are paying, so these are the fixed costs which you are paying fixed amount of money in a monthly basis or in the quarterly basis or yearly basis. Okay, so this is this one sunk cost, that the cost which is going to be backdated. Okay, yes, now the question is, in long run equilibrium, the price in perfectly competitive market is equals to option number 1 short run marginal cost, short run average total cost, C marginal revenue, and D none of the above. So what do you think, what will the right answer for this question? In the long run equilibrium, in the long run equilibrium, price is perfectly competitive in the markets, equals to. Okay, so when you see this question, so here in the long run perfect competition, in the long run equilibrium occur when the firm are the earning zero economic profit, and this profit, economic profit, and this profit is nothing but your normal profit. Yes, so here you can see whatever the price is decided, this price it will be equals to your marginal revenue. What is the marginal revenue you will get? So such firm is kind of your, for the long run equilibrium, such firm is kind of your price taker. Who is price taker? Like your perfect competition. Okay, so they are price taker. So that's why when you are a price taker in the market, so this is the exact happen in the perfect competition. Marginal revenue, that is your price, is equals to your marginal revenue. Okay, in a long run. But when we are talking about for the in the short run, what happened in the long, in the short run, in the SATC. Okay, so short run average total cost in this point. Okay, in this point, while the price may equals to STCT and SMC, small marginal cost is equilibrium, and this is not a defined condition in the long run. So the firm optimizes based on the long term cost rather than its short term fluctuation. Yes, so that's why what will be the reason for, if we are talking about the long run equilibrium, in case of perfect competition market, it's your price equals to your marginal revenue. It's equals to your marginal revenue. So right answer will be marginal revenue will be the right answer. Okay, why this happen? Because they, in the long run, the perfect competition, they are the price taker, not a price maker. Okay, so they are price taker, that's why your additional revenue is called your price is equals to your marginal revenue. Yes, now the second statement, the next question is statement number 1. On every point on the straight line demand curve, the point elasticity are equal. The point elasticity are equal. Second statement is giving to you, on every point on the rectangular hyperbolic shaped demand curve, the point elasticity are not equal. So what do you think, what will the right answer is? It's actually in your screen, that is option number B. Both are incorrect. Why both are incorrect? Because on every point on the straight line demand curve, okay, if I'm drawing the straight line demand curve, this one straight line demand curve, point elasticity are all equal? No, because the linear demand curve price elasticity of demand is vary at a different point, because here the price elasticity is different, here the price elasticity is different, here is the price elasticity is different. Okay, the elasticity is high at the upper portion. Okay, because here you can see the elasticity is greater than 1, but when we are comes lower and down, so the elasticity is less than 1, and here this point here you can see the elasticity is equals to 1. Here you can see the elasticity is infinite, and here you can see the elasticity is equals to 0. So this is in case of every point of time, in the straight line demand curve, the point elasticity are not equal. Okay, they are in the upper portion you can see there the high price elasticity, in the midpoint you can see there is a unitary elasticity, and at low you can see the inelasticity, that means elasticity is less than 1. Yes, the next statement, that means this statement is false. Yes, on every point on the rectangular hyperbolic shaped demand curve, point elasticities are not equal. Actually both statements are just opposite to each other. In the straight line, point elasticities are not equal, but in rectangular hyperbole the point elasticity is equal. Okay, so here you can see a rectangular hyperbole demand curve, the price elasticity is a constant. That means in rectangular hyperbole is nothing but your unitary elasticity. Yes, unitary elasticity, which I have explained in the last question. Yes, this is rectangular hyperbole is nothing but unitary elasticity. So in this unitary elasticity, if you draw any point in the demand curve, that is equals to the point elasticity is equal in every point of the demand curve. Okay, so yes, both statements are incorrect. Okay, now let's move toward the next question. Special drawing right. This question is belongs to special drawing rights. So what is not true regards to the special drawing rights? Statement number 1, that is special drawing rights are supplementary foreign exchange reserve asset and maintained by International Monetary Fund. Yes, and SDR are the unit of account for the international IMF, and SDR are claimed to currency held by IMF members country for which they may be exchanged, and the SDR are currency of IMF. What do you say? This is not true. That means this statement is, which statement is false? Which statement is false? So yes, option number D is false, because SDR is not a currency. It's not a currency of IMF. Yes, SDR is a supplementary foreign exchange reserve asset that is maintained by the International Monetary Fund, which is controlled by the International Monetary Fund. That is SDR. SDR, it's a unit of account of IMF, International Monetary Fund. This is also true. SDR are claimed to the currency held by IMF member country for which they can exchange, but SDR is not a currency of IMF. Yes, yes. Next question, the assertion is giving to you and reason is giving to you. So assertion is return on investment is a prime ratio for judging profitability of company. Then reason is given, the turnover of company play a major role in determining the return on investment of the company. So let's understand the first assertion. Return on investment is a prime ratio for judging the profitability of the company. So when we're talking about the profitability ratio, so this profitability ratio is used to evaluate how efficiently a company generate profit related to its investment. Yes, and it helps to assess the financial performance of the company and make the assertion on the basis of that. So yes, the ROI, it helps, it's given idea to the judgment of the profitability of the company. So yes, first statement, that is assertion, is true. Yes, now the reason is given, the turnover of the company play a major role in determining the return on investment of the company. So yes, because its impact on the ROI. If the turnover is highly, class sales can contribute to the better profitability, but turnover alone does not directly determine the ROI, because what cost efficiency a particular company use, what capital structure is particular company use, what a profit margin every year company earn. So that's on the basis of that you can judge the profitability, the ROI on the basis of that, but only with the help of turnover, this is not true. Yes, you can judge on the basis of your cost efficiency, you can judge on the basis of capital structure held by the company, on the basis of whatever the profit margin, which the profit margin play a crucial role for determining the ROI, return on investment. So here statement number 1, both are the statements are near about correct, but it's not exactly explain the assertion. Yes, so here the option number B is correct. Yes, look, now the next question: which of the following analysis is suitable for risk return analysis in financial decision? So when we talk about the risk return analysis, we can easily get a click of that. This is the analysis which use under the CAPM, or either in a SWOT, either in a duo point analysis, or either in a EVA analysis. So here you can easily mark your question right answer with the risk return analysis. We discuss their financial decision in our CAPM model, because in the CAPM model, the formula of the CAPM model, that is ER is equals to your return, that is your RF. Yes, RF, return risk free return plus beta. You have to minus RM with RF, that is your risk premium. Okay, and you have to multiply with, yes, this is a formula. Yes, this is a CAPM formula. So in this CAPM formula, we analyze the risk and return, which on the basis of which we can take a financial decision. So here you can see this beta is nothing but your systematic risks. There are the two risks. Okay, the systematic risks, this is risks which are uncontrollable, and unsystematic risks, that is which you can control. Okay, and this is RF is nothing but your risk free rate. Okay, this is your risk free rate. And RM, that is your market return. From that market return we reduce risk free premium rate, we will get market premium price. So yes, this is your CAPM analysis. So yes, option is right answer will be CAPM. Yes, now the next question, that is your match the pair question. Here you can see that is Modi Gilani Miller approach. Okay, so now we are going to be very quickly, because these are the simple question. In the Modi Gilani approach, we say the arbitrage approach, because explain the arbitrage process and arbitrate how, that means to give the give exact overview of what arbitraging, that means taking lowest risk. Okay, that means selling goods or services from high market and purchase from the lower market, that is your arbitraging. Then net operating income approach. So net operating income approach we have seen in capital structure. Yes, and the short term money market instrument we have seen in the commercial paper, and the factoring is a part of your working capital. So you can easily mark this one. Now what is the factoring? So factoring, I will explain you. Factoring, it is involves selling account receivable to the third party for immediate cash, if they help of cash, immediate cash, so helping business managing working capital efficiently. So this is your factoring. So you have to match factoring D with your second one. So D with your second one, this one. Then B net operating income approach you can match with easily, that is capital structure. So option number A will be the right answer. Yes. So next question, that is capital budgeting. You can easily match the capital budgeting profitability index, internal rate of return, then your capital investment decisions. Capital budgeting, it's matched with you can easily match the capital budgeting with the planning capital structure. Okay, then profitability index is matched with profit, benefit and cost. Okay, A match with fourth one, B match with the third one. Okay, then internal rate of return, you can match internal rate of return with the time adjusted rate of return. Okay, so you have to match with this one, so C will be the right answer. Capital investment decision, it's nothing but your irreversible. Okay, so capital investment decision which often involve large and long term commitment, that's why this is irreversible, so it is costly to reverse. That's why capital investment decision is irreversible. Okay, yes. Now the next question, this is the last one question, after that we can end this question. Okay, so financial break even point. Financial break even point is a point at which the minimum level of earning before interest and tax needed to satisfy the fixed financial charges. This is your what? Financial break even point. So this is a point level where earning before interest and tax, that is your EBIT at which the company cover the fixed financial cost, like your company's interest, company's preferential dividend. Okay, so this one, so this is your financial match with fourth one, that is A is matched with fourth one, this one, so two options going to be cancelled. Now the cost volume profit analysis. So in the cost volume profit analysis, this is the analysis where we study the relationship between, in CVP model, what we study the relationship of the fixed cost with their variable cost, with their sales volume, with their profit. This is what we study in the cost profit analysis. So this is, you can easily match with third one. Okay, so here option number 1 will be the correct. Then internal rate of return. So this is the rate of discount at which your NPV is 0. IIR, the point at which your NPV is equals to 0. Okay, when your NPV is reached to the point of 0, then this is your internal rate of return. Then non-operating income approach, this is your was cost of capital remains same for the different degree of financial leverage. Okay, so if you use your debt ratio or equity ratio, so at a particular point of time, or your cost of capital remains same for the different degree of financial leverage, so you can match with this your second one. So yes, option number 1 will be the right answer. Okay students, so now we are ending today's session over here. If you like my session, so please like it, and please do subscribe, and if you want more question like this, so it will be helpful for you, so you can comment me in a comment box and type more. Okay, we want more. Thank you so much. This is a match the pair question. So as you know, that is list number 1, you have to match the list number 1 with list number 2. So here the liquidity, there the risks is given in your list number 1, and you have to match with what are the meaning of that risk in list number 2. Okay, so there is a liquidity risk, there is a business risk, there is a financial risk, there is an inflation risk. So you have to match with the best their options. Okay, so first of all, what is a liquidity risk? So liquidity risk is, that is where a firm is having the inability to pay his due on time, that is a liquidity risk. Okay, so you can easily match this one to your option number third one. So you can match the liquidity risk is related to inability to pay its due on time. okay, when firm in a risk. Okay, so this one. Then here is a business risk. So business risk is a when you, business is a kind of thing that which you have seen the fluctuation in their life cycle. Okay, so here you can easily match the business risk is a risk related to fluctuation in their profit. Sometimes business earn the profit and sometimes is suffering from the losses. Okay, so you have to match, you can easily match the business risk with the fluctuation in profit. Then you have to go with the next, that is the financial risk. So as you know, finance is related to the funding. Okay, and the company generate his fund from the he decided his structure of the capital. Okay, so the capital structure is you can easily relate with the risk related to the firm's capital structure. If you find there is a risk in your capital structure, so there is a financial risk. Okay, so you can easily match with this one. Now as you know, the inflation risks, inflation directly related with your purchasing power of the power of the consumer, and this purchasing power is fluctuated by with the help of or the with the increase or decrease in income of the individual person. So here you can easily match the inflation risk with the risk related to the purchasing power of the income. Okay student, so here the right answer for this question, as the code is given to you, so a liquidity risk is matched with the third one. So here you can easily eliminate the two options, option number A and option number B. Now you have to match the business risks business risks with the risks related to the fluctuation, that is option number 4. So you can easily match the option number D will be the right answer. Okay, and I'm also saying your seeing your chats in the chat box. Okay, so answer, try with yourself, and I'm waiting for your answer. Which of the followings are the internal hedging techniques? So as you know, the hedging techniques which having the two methods which we follow, that is one of them, that is the internal techniques and the external techniques. So student, let's understand and here you see the question is about which of the followings are internal hedging techniques. So first of all, if you know this kind of question, how to solve it. So here the option is giving to you, I'm just going to reading, that is leading, netting and swapping. So what is leading, netting and swapping? So as you know student, this is they are the two techniques. First one, that is the internal techniques, and external techniques which we have studies in the transactional exposure in the field of hedging. Okay, so when we're studying about the internal techniques, so internal technique is related to of the internal factors like your risk sharing, like your leading and lagging, netting, pricing policy and matching. These are the internal factors, internal techniques. In this way you can use the hedging techniques. Okay, and there are the external factors like a forward contract, currency future, currency options, money marketing hedging and currency swap students. Okay, so let's understand what is the two things which is really important. So you know that when we're studying about the internal hedging techniques, so this is the strategy of the company to use and mitigate the foreign exchange risks without laying on the external financial instrument. So here actually the internal hedging helps to the organization, helps to the company for the foreign exchange. If they see there is a risk behind of the foreign exchange at a time of mitigate with the other foreign countries, so here they use hedging techniques to reduce their risks. Okay, so here you can see there are the two techniques they have follow. For first of all, that is a leading. So leading is what? Leading, that means when company make an payment or receive the payment so earlier than the schedule to capitalize the anticipated currency movement. If I pay pay earlier, whatever day or whatever the date I have decided or I have decided by the company, so this is the way. If you want to reduce your risk, if you pay earlier or if you reduce your risks, you have to receive the money earlier. So this is what, this is a type of hedging of leading. Okay, so this is a leading hedging. Okay, so next one, that is a netting. So netting is, that means you're involving the offsetting exposure in a different currency by combine the payment and receive within the company's network. So what they have do in this netting, they offset the if they want to offset the exposure, so what they do, they the companies do their payment or their along with that receipt in a one single transaction. So it will help to the company to offset from your exposure. Okay, so generally the multinational company you do this kind of things because they are having a different countries transaction, they have their different transaction with the different countries, like they provide a subsidiaries. Okay, so they use a netting to reduce a number of currency transaction, because if the most of the currency transaction is seen your your passbook or in your transaction list, so it will be adversely affect to the company. Okay, so this is a leading and the netting. So as you know that is for this question, what will be the right answer according to this, as we know that the internal hedging techniques are leading and the netting, and the swapping is the external technique. Okay, so here will be the right answer will be first and second. Okay, so option number 1 will be the right answer for this question, guys. Okay, yes. Now the swapping is also, as you know, the swapping is external techniques where the two parties exchange the cash flow and often use a currency or interest rate risk to manage them. Okay, now the next question, that is the examine the following statement. Examine the following statement about the function of a financial system and state whether they are true or false. Select the correct option from the given code below. Okay, so here the statement is given to you, have to find out, you have to recognize the what is it true and what is the false from the following statement. So first statement is given to you, student, that is the facilities operation of payment system. The another one provides a mean of profitable the mean provide the means of the portfolio adjustment. Option number 3 helps the speculators to be one price movement, and that is fourth one, channelize funds between the lenders and the borrowers. So let's understand the first statement, that is the facilitating the operation of the payment system. So first of all, a financial system provide a payment mechanism. Okay, and like payment system like your banking. Okay, banking, you when you do the digital payment. Okay, digital payment, the use of banking transaction using a digital payment system, and when you transfer your cash, that is cash transfer. So for the both smooth economic transaction, that's why facilitate the operation for the payment system. This is the true statement. Okay, because it's related, it's a function of financial system. Okay, so this is true statement. Now the another one, when we are talking about what are the function of the financial statement provide a means of portfolio adjustment. So yes, this is also true statement, because the financial market and the institution help the investors to adjust their portfolio. And what the way they adjust? By the allowing buying and selling of the asset based on their what they have, they carry a risk and how much they return they will get from that. Okay, so it's depend on the what risk they want to prefer, and it's depend on the what return they will get from that particular thing for when they choosing the portfolio. Yes guys, so here the second statement is also true. Now the third statement, that is help speculators to be one price movement. Okay, so here this is a false statement, because when we are talking about the function of financial statement never helps to its speculators. Okay, because the primary function of the financial system is not a speculation. The financial system not helps or not promote to the speculation. So this statement is going to be wrong over here, but the effective fund allocation and risk management, that is the most important factor when we are talking about the financial statement, student. Yes, so this statement is false, that means option the statement number third one is false over here. Then the channelizing fund between lender and borrower. So yes, this is a function of financial statement, because with the help of this channelized fund, the fund system ensure the efficient allocation of capital from the lenders and the borrowers. Okay, so this is yes, this is also true statement, student. Say yes, the option number 1, 2 and 4 is true, and the third one is false. So as we know, that is option number C will be the correct over here. Okay, so here you will get all the explanation along with this. Okay, so you can prepare yourself, you can prepare with your own self. Okay, so this with the help of this kind of notes. Okay, now the next question, that is this first the tool is match the pair, is again the match the pairs. And as you know, the list number 2 is about what is the cost of capital, what is the net present value, NPV, what is IIR, what is the beta. Okay, and the list number 1 give the meaning of that, and what is the meaning of that, what they included. Okay, so you have to match with. So first of all, the first statement is given to you, the discounting rate at which the present value of cash inflow is equals to the outflow. So as you know that the point at which your present value of cash inflow is equals to the present value of cash outflow, this is a point, the point of where your NIR, that is internal rate of return, is the point. So in the internal rate of return, you can see the present value of cash inflow is equals to present value of cash outflow. Either you can see the point at which your NPV is equals to 0. So this is your internal rate of return. So you can easily match option number 1 with the third one. So you can easily eliminate the option number C and D over here. Right, student? Now the next question is giving to you in your screen, that is the present value of cash inflow minus the present value of cash outflow. So this is we discuss in a net present value. So NPV is the point where your present value of cash inflow from your present value of cash inflow, when you deduct the present value of cash outflow, so you will get a net present value. So here the option number B having the right answer, that is 2. So here the option number B is correct. Okay, now the expected return on securities issued by company. Okay, so expected return on securities issued by the company, so that is your cost of capital. You can easily match this one. So the cost of capital is a thing that is when you collect your capital, the company, or when the company collect their capital from the different modes. So company has to be legally obligated to pay the return, the expected return to the from where they collect their funds. So the expected return on security like your equity, security like your debt. Okay, so issue by the company. So this is your cost, or this is the cost of the capital of the company. Okay, so yeah, you can easily match the C with 1. Then the relationship between the systematic risk and the expected return on stock, it is what? It is your beta. Okay, because beta helps to calculate, beta helps to evaluate the relationship of the systematic risk. So what is the systematic risk, student? So systematic risk, the risk which is uncontrollable by the company. Okay, so in this kind of risk, this is your systematic risk. So systematic risks are the risks which is here you can see the beta is find the relationship between the systematic risk and the expected return on the stock. So that is your beta. Okay, understand, student? Now the next question. So here all the explanation is giving to you. Okay, so as we know, we study the beta on the either of the above, we are talking about the systematic risk and the unsystematic risk, so it is your part of the CAPM. Okay, so we see this point in the CAPM. Now the next question, this question is a numerical question. I have also included some numerical questions because numerical questions having the good weightage in your examination. So let's understand. First, this question is giving to you, that is, if the unexplained variations between the variable x and y is 36%. So what is the coefficient of correlation between the variable? First of all, you have to understand what is the unexplained variation. So here, if our unexplained variation on the variable of x and y is 36%, so when we are talking about unexpected variations, or you can say unexplained, if my unexplained variation is 36%, so what about this one? So the variation is called as explained variation. What? Explained variation. So the remaining explained variation will be 64%, as we know. Yes. So what you have to do, this is the simplest question, simplest. So what you have to do, just take this 64 is nothing but, when you have to divide with 100, so you will get, because we do not want the percentage sign, so I will get 0.64. you have to convert this percentage in this form, so 0.6%. so when you have to take a square root of this r, okay, so you can easily get your answer. That is what you have to do, to take a under root of 0.64. so here you will get 0.80. so this is your r, that is coefficient of correlation. Okay, so you can easily mark this question, that is option number D will be the right answer. So what you have to do, there is what is the coefficient of correlation? So coefficient of correlation is denote the explained variation. Okay, so that's why we calculate on the basis of that, not with the use of explained variation. Yes guys, now the next question, here the explanation is given to you. Now the next question is in your screen, that is, if the population is heterogeneous, which of the following probability sampling methods is more appropriate? So as we know, our whenever the companies, when the population is having the heterogeneous, that means the population which carried a different group of data which are not homogeneous with each other. Every group of data is different from each other. So this is if the population is heterogeneous, is not collected from the on the basis of homogeneity. So if they collected on the basis of some income, education, some are collected from the age, some are collected from the gender. So this is what you are heterogeneous. So whenever the population is having the heterogeneity in the population, so what kind of method in the probability we have to use? We have used the quality the samples, that is a stratified sampling, because in the cluster sampling, in the quota sampling, when we are talking about the snowball sampling, in all this sampling we use a homogeneous data. Okay, but only in the stratified sampling, where the stratified the data according to the whatever the data is available. So the stratified sampling, here we use the stratified sampling based on the according to the heterogeneous population. Okay, so what will be the right answer over here? Stratified sampling. So you have to keep in your mind, when we are talking about the homogeneous things, so we use a cluster, either we use a quota, either we use a snowballs. But for the heterogeneity, if your population is heterogeneous, we have used a stratified sampling. Yes, so explanation is giving to you. Now move toward the next question, student. This is a question of, again this is question from the statistics. Okay, because the statistics topic is generally the most confusing topic, so I'm with you with the lots of question of the statistics. Let's understand this statement. Okay, so first statement is given, this question take too much of time. okay, and just calmly and understand every concept. Okay, statement number 1 is given to you: in the forming a 90% confidence interval for a population means from a sample size of 22. Okay, so the number of degree of freedom from the t distribution is equals to 20. If you little bit having the knowledge about the t distribution, so you can easily mark. So as we know that when we are forming a 90% confidence interval for the population mean from sample size is 22. Okay, so there is, if you don't know about anything, okay, if you don't know about what is the confidence interval, what is the population mean, and so, but if you know, that is whenever our sample size, and first thing that is you have to keep in your mind, the degree of freedom and your whatever the sample size, that means your n, never be equal, first thing. Okay, so here you can see the sample size is 22, and he say the number of degree of freedom for the t distribution is also 22. So this is not the easiest way you can answer this kind of question. Our sample size, that means your n, is never be equals to the degree of freedom. So how do you calculate our degree of freedom, ma'am? So for the calculating the degree of freedom, the simplest formula, that is n minus 1. Okay, so as we know our n, that means number of sample is 22, from the 22 we reduce 1, so we will get a 91. So degree of freedom for the sample size, if nothing is giving to you, only a sample size is giving to you, so for that the degree of freedom will be 91. So this option is going to be wrong, because degree of freedom, it's never be 22, it will be 21. Yes, understand? Now the next one, suppose in a testing hypothesis for the population proportion, the p value is compounded to be 0.143. The null hypothesis should be rejected if the chosen level of significance. So this statement, when we are talking about this statement, so what you have to understand, that one thing, that is okay. So yes, you suppose the question is giving, okay, first one, the suppose the testing hypothesis for the population proportion, the p value is compounded 0.143. okay, so the probability value, here we calculate or tested our hypothesis, and on the basis of that the p value we will get, that is 0.143. okay, now your p value, okay, so simplest way, and the null hypothesis subject to reject if the chosen value is significance of 0.5. As we know that whenever your p value is greater than your level of significance, either level of significance is denoted by the alpha. Okay, if your p value is greater than the alpha, so you have to accept the project or accept the hypothesis. Okay, if your p value is less than the level of significance, in that case you have to reject. So here you can see your p value is 0.143, and 0.143 is greater than your 0.05. so here you can, so what he said, you have to reject, but this is a wrong statement, you have to accept, because your p value is greater than your level of significance. Okay, so so here the both statements are false, so both the statement A and B is false over here. Okay, so here this is a wrong option, actually this is a C option is correct, both the statements are wrong, because I gave you what is the exact answer and how do I calculate that. Okay, so yes, here you can see the statement number, this is also false. Okay, this is a false. Okay, this is false, so there is an, you can see the degree of freedom is 22 when we calculate this. Okay, so this is false statement. Okay, and here you can see what is the p value. Here, as we know, the p value is less than or equals to significance level. In that condition, if it is less than, so you have to reject it, and if your p value is greater than the significance level, so we fall to reject. That means you have to accept it. Okay, and generally why we do not use acceptance this word in our hypothesis testing, because whatever the hypothesis we are calculating, it's calculating on the basis of sample, and sample having the probability of error. Okay, that's why we do not use the acceptance word in whenever you are accepting the null. You never say the accepting the null hypothesis. You can say you have to say that is fail to reject and not reject the null hypothesis, because whatever we are calculating on the basis of sample, not on the basis of population. Okay, now the next question in your screen, again the statement is given to you, so you have to match the right one. So here see, this is also question from the probability. Okay, the read the statement ABC and state whether there is a true or false. Okay, so you have to see what a statement is true and what are the statement are false. Okay, first statement is given to you, the mathematical formula for joint probability. Okay, so P is equals to, the formula is given, P joint probability, P probability of AB is equals to probability of A divided with probability of B, multiply with probability of B, multiply with probability of B. Okay, so this is the right way to calculate our probability. So whenever the joint probability word we use, so what you have to do, you have to use the formula, that is probability of A. We use this kind of formula because to hold a good when the events are statistically independent. Okay, so this formula, this is a formula we do not use in the joint probability. Okay, so when we are talking about the joint probability, so here the probabilities of formula is the formula of the intersection. So what the formula we use, probability of A intersect B, and we calculate the probability of A multiply with probability of B, and here the probability of A divided with probability of B. So this is a formula you have to use. So either this is a wrong formula, so option number 1 is wrong over here. Okay, the next statement, in a decision. So the first statement is all about the basic concept of a formula. Okay, if you know, if you are very familiar with these formulas and how do we calculate, how to make the intersection formula, and how to make a joint formula, how to make a union formula. Okay, if you know that, so you can easily mark this question. Then the next one, in the decision problem having 4 alternatives and 6 state, the payoff table will include the 10 payrolls. Okay, so here a payroll table for a decision problem consists of 2 rows. What I said, 2 rows representing that it alternatives, and column represent, there are the 2 rows and column represent what, represent the states. Okay, so with a 4 alternative, and here the 4 alternatives given, and 6 states. So alternative, that means your row, yes, and state, that means your column. Okay, column. So in this statement, the total number of payroll will be what? So as we know, if our 2 row and 2 columns, so what is our payroll will be 4. Yes, in the decision, what he said in this statement, in a particular statement, in a decision problem having 4 alternatives and 6 state, the payroll table will include the 10 payrolls. How is it possible? Because we have the 4 alternatives, that means 4 row, and we having a 6 columns, 6 state. So 6 fours are what, 6 fours are 24, so how it will be 10? So this statement is false. Okay, so statement number 1 is also false and statement number 2 is also false. So now move toward the statement number third one. In hypothesis testing, when p value is less than 0.01, then the alternative hypothesis is true. So isn't it true? So as you know, if our p value is less, if our p value is lower, it means that what you are doing, you are rejecting the null hypothesis. Okay, that means the null hypothesis is rejected with the strong evidence. That means you are rejecting the null hypothesis. Okay, I'm just writing again. That is, your null hypothesis will be rejected. That means you are rejecting. If your p value is high, if your p value is greater than your level of significance, so in that condition you have to accept it, as I said before. Okay, so here we accept, or you can say, as we know that we said, we do not reject the null hypothesis. Okay, so this statement is also false because this statement is talking about in the hypothesis testing when p value is less than 0.01. okay, this is less than, so the alternate hypothesis will be true. Okay, so this is, no, actually yes, this is a true statement. Yes, this is true statement because because we are rejecting, because null p value is less than, that means are rejecting a null hypothesis. That means we are accepting the null alternate hypothesis. So this statement is true. So yes, so here the option number option number B will be correct over here. Okay, so this one is giving to you the null hypothesis is true. Okay, now the next statement is giving to you, if the regression coefficient of x and y is greater than 1, regression coefficient of y on x must be less than 1. The second statement, the geometric mean between the two regression coefficient is the coefficient of correlation. So let's understand first statement, that is here the regression equation, that is x and y, that means x on y. Okay, so x on y is bxy. If this one is greater than 1, that means we assume that this if this is answer will be beta xy, that is the regression coefficient, answer will be 1 by 1. Okay, and when we are calculate the regression coefficient of y on x, that means this one, so byx is less than 1, that means it may be 0.18. okay, so this is correct statement. Yes, this is correct statement. Both the statements are true. If our regression coefficient is greater than 1, then the alternate, that is y on x, must be less than 1. Yes, this statement is true. Okay, and the geometric mean between the two regression coefficient is a coefficient of correlation. So isn't it true? No, this is not true. This is a false statement because it's not necessary if the regression coefficient value and correlation coefficient value will be the equal. Okay, because there is a possibility that regression's answer will be on negative or the coefficient answer will be on positive. Okay, so it's all are depend on there is a possibility that there is a negative sign. That's why when we are calculating the geometric mean, okay, so when we are calculating geometric between the two regression coefficient is the coefficient of correlation. So this is wrong because this is the answer will be vary because of there is a possibility of negative sign. Okay, so yes, statement number 1 is correct and another one is incorrect. So the detailed explanation is given in your screen. Okay, so you can see I will send you this PDF after the session, after ending the session. Okay, so here you can see the geometric mean of the two numbers is the square root of this product. So if you take a relationship, the coefficient of correlation, that is R, is equals to the square root of the product. Okay, what he said in the statement, he said in the statement the geometric mean between two regression coefficient is a coefficient correlation. Actually is want to say the coefficient correlation is a 2 times of the regression equation, that is bxy and byx. But actually the formula for the coefficient, when we are calculating the coefficient correlation on the basis of the regression, so here the coefficient correlation formula is the geometric mean of the bxy multiply with byx. Okay, and this statement is talking about this formula. For this formula is does not exist in the real situation. Okay, and not in a theory is given this kind of formula. So the coefficient correlation is the under root of two regression coefficient, multiplication of two regression equation. Okay, this is given in your screen. Yes, yes. Now the next question, which of the following is not a non-parametric test? So as you know, t-test is a parametric test, because the parametric test where the samples are equally normally distributed, so that is well distributed. So the t-test, there is a specific sample is where you want to calculate the mean, variation of mean when your sample size is less than 13. So in that test you use a t-test. So run test is nothing, it's not a kind of this. Okay, nothing is like a run test. Okay, then the next one. Okay, what about the run test? So run test is it's a check. This test we check for the randomness in the data. That means is the data is equally distributed or randomly selected. So run test we use to see the randomness of data. Okay, sign test we use to test the median of population of a population. Okay, median of population. And here the chi-square test is used for the categorical data analysis, and chi-square we use this is a kind of non-parametric test. Okay, so this is a non-parametric test. Now what do you understand about the non-parametric test? That is a distribution of the data and are often used when the data does not meet the normally assumption. As I say, when your data is not normally distributed, so that is your non-parametric test. So in the we use a t-test in your hypothesis testing in a research paper when our data is having the heterogeneous nature and there is no specific numbers of data is given, and when your data is more than 50. Okay, so in that condition you use a chi-square test. Okay, so it's not parametric test. So as we know, this is chi-square test is non-parametric. Sign test is also to see to see the median population. Okay, run test is used for the randomness in the data, but the t-test is a non-parametric, it's a parametric test. Okay, so the t-test will be the right answer. Now the next, which of the following is measured by the split half reliability method? So first of all, the split half reliability method is used to measure what your internal consistency of a test, because it's involved the dividing a test into two halves. Okay, two halves, either you can say you split the data on the basis of odd value or on the basis of even value. Okay, even value. So that is the split reliability. Okay, so as you know, in the Delhi, I will give you the example of Delhi. They use their vehicle number on the basis of odd and even number. Okay, so because they want the Delhi's politicians are want to reduce or the government want to reduce the population, so they take a initiative of driving your vehicles or drive your vehicles on the basis of odd and even numbers. One day you use a odd vehicle and second day you your second day even. So this is a way. Okay, so this is the initiative is taken. So this is the example of your half split reliability method. So this what we this method is used in the internal consistency reliability. Okay, now when we are talking about the test red test reliability, so this is measure to consistently what is the over time by the administrating the same test twice. Okay, when they are using the same test twicely in their testing, so this is your test reliability. What is the internal rater reliability? So internal rater reliability is helps to define to take measure consistency between the different raters or the observers. So this is what. So here what will be the right answer? As I know, the split half reliability method is the internal consistency reliability. Okay, so option number 1 will be the right answer for this question. Now the next question, that is, in normally distributed area, the level of skewness, yes, the level of skewness and kurtosis must be. Okay, so what do you mean by this skewness and what do you mean by the kurtosis? So as you know, I will tell you with the help of diagram. Skewness give the movement of your skewness. Okay, give the either your data is skewed or the bended on in the right side. So it's said that rightly skewed. If your data is plotted or the skewed or the bended in the left side, so it is called as left side skewed, or right side skewed is called as positively skewed, and left side called as negatively skewed. Okay, so now what is this? Is a skewness. Okay, skewness. Now what is a kurtosis? Kurtosis give the in which direction your data is going. Either it is a plateaukurtic, that means flatter, that is this is called as plateaukurtic. Okay, when your data is flatter. Okay, and when your data is normally distributed, then it's called as mesokurtic. Okay, mesokurtic, when your data is having the peak this is way. Okay, this is a peak. So here you okay, plateaukurtic, mesokurtic, plateau, this is plateau. Okay, this is plateau. Okay, so here you can see in the normally distributed data, the level of skewness, or either you can the kurtosis must be what? 1, or either it must be 0 or less than 1 or the equals to 0. So as you know that when we are talking about the normal distribution, the skewness must be 0. Okay, and when we are talking about the kurtosis, so here the kurtosis is also equals to 0. So as you know, the right answer will be the 0 if we are talking about the normal. So in the normal distributed, your skewness you can see like this, and in the kurtosis you also see your data like this. Okay, so here you can see the exactly tangent to the O, that means 0 is exactly tangent to the 0 O. Okay, so here if there is a 50% in your left side, there is a 50% data, so exactly in your right side is also having the 50% of data. Again in this diagram there is this is equally divided in the half. That's why it's equals to, when your normal distributed data, the level of skewness and kurtosis must be 0 when we are talking about normally distributed data. Okay, now the next question, again the true and false statements. So first statement is giving to you, hypothesis testing cannot be done with the help of p-value. Okay, hypothesis testing cannot be done with the help of p-value. How is it possible? Without probable value, how do we calculate our hypothesis testing? And in this statement he is saying hypothesis testing cannot be done with the help of p-value. Actually the hypothesis testing is often conducted by using the p-value, and the p-value helps to determine whether to reject the null hypothesis or whether to accept the null hypothesis or not to reject the null hypothesis. Okay, so it's all depend on your null hypothesis. So first statement is false statement. Yes. Now the second statement, accepting null hypothesis when it is true does not result in an error. So isn't it true? Yes, this is true. When your hypothesis is null hypothesis is true and you accept it, that means there will be no error. So this one is true. Yes. Then the rejecting a null hypothesis when it is actually true, result is an error. So yes, this is also true. When your null hypothesis is true but you're rejecting this, so it's the what kind of error this is a type 1 error. When your null hypothesis is true but what you have to do, you are rejected that null hypothesis, so this type of error is called as type 1 error. So this statement is also true. So first statement is false and another two and three statement is true. So the option number C will be the right answer. Yes. Now the next question, the list number 1 is given to you, again the list number 2, that means you have to match this one. Okay, so here you can see divided frequency into two equal parts. So when you divide your frequency in two equal parts is called as your mean. Okay, when you divide your frequency in 4 equal parts, so it is called as your quartile. Yes. When you divide your frequency in 10 parts, so it's called as your decile. When you divide your frequency in 100 parts, so the percentile. So as you know, this is the simplest question. So what will be the right answer for this question? Option number 1. Yes. Let's move to the next question. So next question is belongs to your international business, industrial policies. Okay. So here you can see there is an industrial policy. Industrial Policy Act 1948. There you can see the revolutions in the industrial policy. Yeah, first of all, the industrial policy was established in 1944. Then it's called the they're getting revolution industrial policy, that is in 1956. Then again the new policy is established, and there is an you can see there is an revolution in the industrial policy in 1977, then again in 1980. So what happened in that duration? So here you can see when the industrial policy in 1948 is came, so it is a point where the mixed economic work. Okay, so you can easily mark one first with the third one. So this policy introduced the concept of mixed economic in India, where both the public and the private sectors would exist. Okay, so mixed economics where you use a combination of the public plus private. Okay, we will run our economic with the help of public and with the help of private industries. In the industrial policy in 1956, we see some revolution is based on the developing heavy industry. So there in the 1956 they see the a heavy weightage of the heavy industry. There's a great revolution because in this policy they emphasize the development of the heavy industry and establish the framework of the industrial growth under the state control. Okay, when you see in the industrial policy in 1977, so in the 1977 there is an they reduce the industrial sickness and unemployment things and the rural and urban disparities. So in the 1977 policy, they actually focus on promoting the small scale industries, and with the help of small scale industry, obviously they reduce the unemployment in the particular region, they improve the imbalancements and they reduce the regional imbalance. Okay, and also they help to address the sickness of the industry, and they help to reduce the sickness of the industry and also to addressing the unemployment. Okay, so all this happened in 1977. Okay, Then when we see in the what happened in the 1980 industrial policy, in 1980 industrial policy there is a breaking vicious circle inhabited by the infrastructural gap and inadequacy of the performance. So here you can see this policy actually aim at correcting the infrastructure deficiency, and they want to boost up the industrial performance with the help of using or adapting the modernization and technological advancement. So this is what the industrial policy in 1981. So what will be the right answer? Yes, option number B will be the right answer for this question. Okay, let's move toward the next question, that is assertion and reason is giving to you. As you know, the first one, that is IBRD. Okay, so in the what is IBRD's full form? That is International Bank for the Reconstruction and the Development. So IBRD was created to provide a long-term financing. Isn't it true? Actually, the IBRD it's known as a World Bank. Yes, it's replaced with. Okay, and this World Bank is established in 1944 with the intention to offer the long-term loan for what? For infrastructural development and also for the reconstruction of the project, especially at the time of war. Yes, student, at the time of war. So IBRD was created to provide a long-term financing. Okay, now the reason is given behind this, that is IMF, International Monetary Fund, was created to solve the short-term balance of payment problem of the member countries. So actually it's not going to match with, yes, assertion is true as we say, and the reason is also true, because IMF is what? International Monetary Fund. So International Monetary Fund is actually see, or actually give the observation of what country are facing, or what country need a balance of, because every country is having their balance of payment. So what IMF duties is to correct the balance of payment of the company or of the countries. Okay, so if there is a shortage of balance of payment, so IMF give a short term kind of loan to the member country to solve the problem of deficiency in the balance of payment. Okay, so yes, the statement is true, but the reason is not correctly explain the assertion. So yes, the both statement is correct, but does not fully explain the assertion for this one. Okay, so yes, option number C will be the correct one. Now the next one, which of the following statement is true and false? So two statement is given to you. First statement is that balance of current account is based on flow of concept, and the next statement, balance of capital account is a change in stock concept. So here you can see the balance of capital account in change in stock concept. This statement is true because capital account record all the transaction, all the net changes which you have seen in the ownership of the foreign assets and the liabilities. This is a work of the capital account. Yes, and what about the current account? So when we're talking about the current account, so current account is record all the flow of goods and services, or you can say the income and the income, and also the current transfer between the countries over a specific period of time. So this is when we are talking about the balance of current account is based on the flow concept. Yes, it is based on the flow concept, flow of goods, flow of services, and also flow of income. Yes, okay. Now when and the balance of capital account is a change in stocks, because current capital account is related to the long term funding, long term funds. Okay, so that's why here, so capital accounts regard to the net change in the ownership of what? Your foreign asset, or you can say the liability. So here the both statements are true. Okay, first and second. Now the balance of payment of a country, this is a question from the international business. Okay, so the balance of payment of the country on account is equals to either the balance of trade plus short term loan, either balance of trade plus net visible export, balance of payment minus cash flow, or balance of payment invisible trade import. First of all, balance of payment of any country is record all the economic transaction. Like there is a balance of payment, if there is a surplus of import or surplus of expenses. Okay, so export. So here the balance of payment transaction between the residents of country and rest of the world over a specific period of time. So when we are talking about the balance of trade, so trade is where we calculate the trade with the help of export goods. From the export goods we reduce our import goods. So this is your balance of trade plus short term loan. Okay, this is your balance of trade. And when we are talking about the net invisible exports, so this is the balance of invisible trade is nothing but when your services. Okay, invisible trade, that means where the services you have provided, incomes are invisible, transfer of payment. Okay, transfer of payments are invisible. So this is your balance of invisible trade plus imports. So thus the balance of payment is what? It is your balance of trade plus your net invisible export plus your cash flow. Okay, so here the balance of trade plus invisible export, so here they represent the current account balance which play a major component of BOP. Okay, so here the right answer will be B, because B, the balance of trade plus net invisible export. So balance of payment of the country account is equals to what? The balance of trade. So balance of trade is nothing but your whatever the export, from the export you have to reduce your import. Okay, and add the net invisible export. Invisible export like services what you are giving, or the incomes, or the transfer of payment. Okay, so here the right answer will be option number B. Now next question, an increase in current account deficit with place other thing being same. So the filling the blanks, I think the filling the blanks is given. And pressure on the human currency value, pressures on the, sorry for the mispronunciation, pressures on the home currency value. So as you know, when we are talking about the current account deficit, so what is that? Current account deficit, that means the countries importing, whatever the country is importing is greater than what the country is exporting. Okay, that means when country's import is greater than the export, that is country or the country face a deficit in the current account. Okay, and if the higher demand for the if there is a higher demand for the foreign currency, it means that to pay for the import. Okay, if means that if you see there is a higher demand for foreign currency, so that is you to pay for the import. Okay, that means you are paying for the import. And lower demand for the home currency, it means that there is an export is higher in the particular export. That means a fewer export means a less demand for the domestic currency. Okay, so here the result home currency, if the home currency is depreciating or the depreciates, it means a value of the home currency is falling. It lead to downward pressure in the home currency. So what will be the right answer? Answer will be the downward. Okay, so the pressure of the home currency value is downward. Yes. Now the next question. Sorry. The next question, which of the followings are the example of the currency tools? Currency tools. So first of all, these currency tools are the government imposed measure to regulate. This currency control tools is used by the government to regulate the inflow and outflow of the foreign currency. Okay, and this foreign currency which include the import restriction. Okay, to actually this question is about what is the example of the currency control. Okay, so the currency is controlled by the government. Yes, and for controlling that, governments make a rules and regulation for what to control on the inflow and outflow of the foreign currency. So if they want to control it, they restrict the import. If they want to control it, they prohibit the remittance of the fund from the outside. Okay, also the ceilings on the granting credit to the foreign firm. So all these are the options are the right to control the currency. Government take a important step toward to restrict the import from the foreign country, restrict the prohibition of the remittance of the fund, restrict the prohibit the remitting the fund, and also seal the granting credit to the foreign firm. So this is option number A will be the right answer. Now which of the following was not related to step initiated to overcome the deep economic crisis of 1991? So what happened in the duration of the 1991? What are the effect on the economic? So as we know that in the 1991, India were actually aim to liberalize our economic and want to overcome from the balance of payment crisis. Okay, because our balance of payment at that period of time, they are continuously we are facing some deficiency in the balance of payment. So to overcome from that, so what the step they want to correct the fiscal policy. Okay, or they want to fiscal correction to reduce the fiscal deficit delay. Okay, along with that they abolished the industrial licensing raj at that time, because this particular industrial licensing reducing the freedom of the industry. So they abolish with the intention to promote the industrial freedom. Okay, and also they want to at that time they wanted to widening the limit of the foreign equity holding a wide range of priority industry. So the first option was not related to this economic crisis in 1991. The first statement is given to laying strong foundation of mixed economic. This is false, because this is not actually a part of the 1991 reform, because India is already is from the beginning it had a mixed economic model. So since from the independence, so the why laying the strong foundation of the mix, because the India actually is formed before the independent is a mixed economy, they follow the mixed economic. Okay, so reforms actually the reforms is happen to were actually intended to reduce the government interventions in the industries and they want to promote privatization and liberalization in 1991. Okay, so the main focus at the period, at the duration of the 1991 is to liberalize the industry and privatize the industry. Okay, so this is the things. So the question is was not related, so option number 1 is not related, because this is a false statement. Because from the independent is from the initial stage, India is mixed, follow the mixed economic policy. Okay, the next question is giving to you, that is what the statement is giving to you, match the pairs, so list 1 and list 2, you have to match with this one. So as you know, the stakeholders, so stakeholders are what, market intermediaries are what, the balance of payment situation is what, and demographic factors are what. So as we know, the stakeholders are the stakeholders, who are the stakeholders, employees, shareholder, management. So these are we called, these are the stakeholders, or even so here the stakeholders are the internal factor of the organization, and the stakeholder is called as the you can match the stakeholder with the internal environment. Okay, now market intermediaries. So when we are talking about the market inventories, is market intermediaries is what, it is a level of macroeconomic environment. Yes, and next one, that is the balance of payment situation. Just give me a second. Okay, so here we know the market intermediaries, you can match the market intermediaries with the macroeconomic environment. Balance of payment situation is what is it's related BOP is where you can match with the macroeconomic environment, and demographic factor you can match with the non-economic factors. Okay, so demographic factors is a kind of factor that is where we study about the population size, we study about the age, education level, income level. So these are the democratic factors. So you can easily mark the option number C with this for this question. Okay, now the next question, and this is the last one question for about from the international monetary system. So international monetary system that prevailed during in 1947 to 1971 is generally known as. So yes, we know that when your international monetary system is prevailed in 1947 to 1971, it is called as your pegging exchange rate system. Okay, pegging exchange rate system. So right answer will be option number 1. Yes, a capital budgeting techniques through which discount rate equates the present value of the future net cash flow from an investment project with a project initial cash outflow is known as. First option is given to you, that is your payback period. Next one, that is internal rate of return, and then your internal rate of return, then net present value, then your profitability index. Okay, so you know student, this is from your capital budgeting. So there is a right answer will be internal rate of return. So I'm here with your solution, that is what is internal rate of return. So internal rate of return, yeah, as you know, this techniques we are used in the investment budget. So this internal rate of return where your NPV is equals to 0, when your NPV is reached to the point of 0, then our internal rate of return will be calculated. So the discount rate that make the net present value for the future cash flow equals to the 0, that is your internal rate of return. So in the other word, we can say that the rate at which a present value of future net cash inflow is equals to the initial investment. Now what is why IRR is important? Because IRR helps to determine the profitability of a particular project. Suppose we have a B, C, this kind of 3 projects. So all the projects are profitable, but which project is more profitable? So we can decide with the help of internal rate of return, isn't it? So if the IRR is greater than the required rate of return, so in that condition, that means if your IRR rate is greater than your rate of return, okay, so in that condition you have to accept it, because it means that your profit is more than what your cost of capital. Now if your suppose your IIR is less than your cost of capital, so in that condition you have to reject it, because this particular project or that particular project will not be cost sufficient or profitable for our organization. So that's why we use over here the IIR, internal rate of return. Now why not the other option we choose in this question? Because when we are talking about the payback period, so payback periods helps to measure the initial time requirement for recurring our cost. Okay, so whatever, suppose I have invested 5 crore rupees in particular project, so in that condition, in which point of time I recover my 5 crore rupees, so that is your payback period. What actually the cost you had invested, that value whenever you will get back, so that is your payback period. And what about the net present value? So net present value is find out the difference between your inflow and the outflow. So actually it helps to find out the difference. What actually, if our inflow is greater than outflow, so yes, it is obviously it's best for the organization. Okay, and next one, that is profitability index. Whenever we are talking about the profitability index, so measure this helps to measure the actual ratio of the present value of future cash flow to its initial investment. So this is why we use over here the profitability index. So student, why I am showing these explanations to you, and because this is a way you will get each and every question's explanation that will help you to prepare better. Okay, so I am here, you will get each and every question with like this explanation, so it will helps you for your preparing very well for your examination. So here is X limited company has a overall PV ratio of 40%. So already PV ratio is already given to you. Now what they are asking, the marginal cost of product A is 30 rupees. Calculate the selling price of the product A. So how do you calculate it? First of all, what we have PV ratio value. So PR value is 40%. So what is the formula of the how do you solve it? So first of all, write what you have, what is given in your examination, in your question. Okay, so PV ratio, when we are talking about the PV ratio, the PV ratio formula, you know, that is contribution divided with sales multiply with 100. And this question they are asking about the selling price. Okay, so with the help of this can we find out? And what about the contribution? So the contribution is sell price minus your marginal cost, isn't it? So we have PVR ratio, we have marginal cost, and marginal cost is, don't get confused, marginal cost is nothing but your variable cost. Okay, variable cost is also known as marginal cost. Okay, so what we have variable cost, we have PV ratio. Okay, so what you have to do, just PV ratio is given to you. Contribution means sales minus variable cost divided with sale multiply with 100. So PV ratio we know that is 40%. Okay, so I can write 40 like 0.14 because the percentage is given, so I am writing over here 0.14. Okay, then as we don't know, but we know the variable cost, so variable cost is 30, and then you have to divide with sales, and then you have to multiply with this. So now the next thing that you have to do, you multiply, this will going to be in multiplication in your left side, equals to left side. So this is 0.40 s is equals to s minus 30. Okay, so either you can write like this, either you can write this, s is going over here. Okay, 0.40 is equals to s minus 30. Okay, so s, now you have to move over here, so you will get 2s. Okay, so there is an there you will get 100. Okay, so this is your 40, this is going to be over here, that is your this 40, this is okay. So what happened, so here you can see your value will be 0.60s. Okay, and is equals to 30, then your s is equals to 30 divided with 0.60. so when you solved it, so s value will be 50. Okay, so this is where you can calculate your answer. So here is rupees 50 is your answer. Okay, the solution is given to you. So this is the way you can solve your question like this. Okay, okay, and how I know more students having question, from where you got 60, ma'am? So it's simple, because you have to shift the s over here. So this is your 1. Okay, from 1, when you less 0.40, you will get 0.60. So from here I will get that 0.60. Okay, now the next one, that is a match the pair question is there. So in the match the pair, there is a sweat equity share, bonus share, right shares, and the buyback share. So this is a very good question, because we get confused many times. What is the sweat equity share, what is bonus share, what is the right share. So let's discuss. Sweat equity share is a kind of share that is issued by the company at discount. It may be for your consideration, but without cash. Okay, it's not given in cash to its employee or the director of their company, because their contribution is good for the company. So they issue the sweat equity share to the either to its employee or either to its director, because their contribution is good. So they issue the sweat equity share, but other than cash. So this one. What about the bonus share? So bonus share is a additional share, but this is a free additional share. We can say this is only given to the existing shareholder of the company, not to the director of the company. Okay, so either they give the bonus share in the form of extra dividend also. So this is your bonus share. What about the right share? So when we are talking about the right share, so right share is offered to the existing shareholder in the form of discounted price, which is given before they are offered to the public. Okay, and what about the buyback period, buyback of share? So buyback of share is kind of your when the company repurchase his own share from the shareholder, because they want to reduce the outstanding of shares in the market. So this is your buyback period. So you can easily mark like now this kind of question. So here what is the share? The list one number 1 is given to you, that is shares are given in the form of extra dividend. So bonus share is giving as extra dividend, so you can match B with 1. So here we can match B with 1 and is also B with 1. So these option going to be cancelled. Now the share issued by the company at discount. So whenever the share is issued by the company at discount, so this is your right share. So you can see is matched with the second one. So this is your right. Then the opportunities to the existing shareholder to purchase the share. So this opportunity is given under the opportunity to existing shareholder to purchase the shares. So this is your sweat equity share. So you can easily mark this question. That is your option number D will be right. That is A second discount. then B is what with 1, and C is with the third one, because third one, the right share is opportunity to the existing shareholder to repurchase the share, and the buyback, you know that the company's call options to buy the share from the shareholder. Okay. Now the assertion is given to you, assertion and reason. So assertion is about the depreciation amount is added back to net profit for calculating fund flow statement, and reason is depreciation is an item of cost but not fund. So what do you will think that what will be the right answer? So see over here, the assertion is true, because the depreciation is a kind of amount which we added back to the net profit for calculating the fund flow statement. Whenever we calculate because this is happen, the depreciation is non-cash expenses, isn't it? And that's lead to reduce the accounting profit, because we are writing depreciation in the expenses side. Okay, depreciation, and this is actually a non-cash expenses, but due to that depreciation our net profit showing low, and this will going to be adversely affect to the fund flow of the company. So the profit and it does not involve the actual outflow of the fund. So that's why this is true, that is depreciation amount is added back, because we are reducing depreciation from the expenses size on P&L. Okay, from the P&L, and due to that expenses, due to depreciation, our profit will be reduces. Okay, so that's why it is we have to add it back to the net profit while we are calculating the fund flow statement, because in the fund flow statement we have find out the actual outflow of fund. Okay, and what is the reason is giving? So reason is also true, that is depreciation is an item of the cost but not fund. So here depreciation, when we are in accounting, we have write in the expenses side, and this reflect the reduction in the value of asset over the time, but it does not impact on the cash flow directly. Okay, directly it's not get impact. So that's why depreciation is an item of cost but not a fund. So this is also true. So here the right answer will be B. Both are correct, and but this not going to be explained correctly. Okay, now the next one, that is next question. There is a 4 statement is given you the question, and you have to find out which statement is true and which statement is false. So first statement I'm reading one by one. So here you can see the dividend. First statement, dividend can be paid out of capital profit if only article of association of the company permits. So here this is a false statement. And why this is false statement? Because dividend cannot be paid out of capital profit unless and until because this is unless it is realized and allowed by the law, not just by the article of association, because dividend is allowed or give permitted by the law, not only by the article of association. That's why our first statement, A statement, is false. Okay, so this statement is false. Now the second statement, that is goodwill taken over may be written off out of the profit prior to incorporation. So yes, this is true. Okay, because the whatever the dividend we are taken over, this can be written off out of the profit we earned before the incorporation. Okay, now the third statement, this is true. Now the third statement, C statement, dividend can be paid out of current profit in spite of unprovided depreciation for the past year. So this is false, because dividend should not be paid if there is unprovided depreciation from the past year, as per this is given in the Companies Act. This provision is given in the Companies Act. Okay, so that's why this is false. Now the option number D is capital redemption reserve can be used for issuing the fully paid up bonus share to the shareholder according to the Companies Act. So here we this is true statement, because capital redemption reserve can be used for issuing fully paid up bonus share. Yes, okay, and this is given in this provision is given in Companies Act 2013, which is returnly given. Okay, so that's why this D is true. So here false, true, false, false, true, false, no, false, true, false, true. So option number A will be the right answer. Okay, now move toward that is next question. The statement select the correct answer from the given code stated which item are current liability. Option number A, payment due to staff. Then option number B, bond redemption after 6 months, advance income and debenture redemption redeemable after 6 months but before 12 months. So what is the correct answer when we are talking about the items related to your current liability? So first let's understand here that all these are items from the current liability. So right answer will be all of the above. Now understand why all of the above. Payment due to staff. So this is your current liability. Okay, because we are writing undue payment or unpaid salary, wages or other payments due to staff. This is your what? This is your short term obligation. Your short term obligation. So this is your liability. Then bond redeemable after 6 months. So this is also your current liability, because since the bonds are payable within the year, they are considered the current liability. So this is happening after 6 months. So but within the current year, so that's why this is your current liability. Advance income is also current liability, but let you understand, when we are talking about the advance income, this is the income we receive in advance, is a kind of your liability, because company are own such services or the or that particular goods, but in near future they have to pay with interest. So that is, if the advance income, it's kind of your current liability. Okay, then when we are talking about the debenture redeemable after the 6 months but before the 12 months, so in that condition this is also your current liability, because since they are due within the 1 year, before 12 months, it said before 12 months, but that means within the 1 year, so they are classified in the in your current liability, because they are covering the period of short term. Okay, so they cover the period of short term. This is kind of your short term obligation. Okay, so that's why here all are the correct correct example of your current liability or items of the current liability. Next, move toward the next question, that is, which of the following signify triple bottom line audit? Now, what is a triple bottom line audit? So I'm just reading the options, then I will explain you. First option is financial, environment and the performance audit. Then B, social, financial and economic audit. Then C, social, economic and environmental audit. Then D, cost, financial, environmental audit. So let's understand, when we are talking about the triple bottom line audit, so this is a kind of framework which actually we use to evaluate an organization performance. Okay, we are auditing, or generally auditing, we are use this word to calculate the performance of an organization, but there are 3 key important area. That's why the triple bottom word is used. So these triple bottom, first is social, that means it's related to your people. Okay, second one, that is your economic. When we are talking about economic, we are considering the profit. Okay, and third one, your environment. Okay, your environment. So environment, that means it's nothing but we are talking about the planets. Okay, so this is your triple bottom line audit. So in the triple bottom line audit, we are considering social, economical and environmental. So this is your C answer will be the right answer. So whenever the social or the people, the point at which we are considering the first point, that is people and the social. So in this point we consider or we measure the impact on the society, or on this society is also include your employees well-being, communities engagement and social responsibility. And when we are talking about the economical, so economical, that means we are considering the profitability, we are considering the economic or impact on the fair business practices. So this way, when we are talking about the environmental, so environmental which include the sustainability in efforts, carbon footprints and your resource uses. So these are your triple bottom line audit. Okay, now the next, this is question, again this is problem question. So you have to solve it. So how do you solve it? During the period of 3,30,000 expenses during the period, there is something, okay, this equation, and the 1,40,000, what will the total asset value? So here the simple is, that means our capital is, okay, this is revenue period, there is something missing, that is revenue during the period. Okay, so revenue value 3,30,000 and your expenses value 1,40,000. so you have to calculate your total amount of asset. Okay, so how do you calculate? First of all, the accounting equation, what are accounting equation says? So assets equals to liability plus capital, that is your equation of accounting. Okay, so here now revenue is 3,30,000. Okay, and expenses is 1,40,000, isn't it? So we have to need to calculate from the revenue, when we deduct our expenses, so we will get net profit. So simple, we have to calculate the net profit first of all. So net profit will be revenue minus expenses. Okay, so 3,30,000 minus 1,40,000, so we will get 1,90,000 is our net profit. Okay, then you have to calculate the closing capital. So how do we calculate the closing capital? For calculating the closing capital, there is an opening capital plus your net profit. Okay, now ma'am, we know that what is the net profit, but we don't know that is what is the opening capital. So your for calculating opening capital, you just what you have to do, whatever your revenue plus your expenses, is it your opening capital? So when you add all to this, that means revenue plus expenses, 3,30,000 plus 3,30,000 plus your 1,40,000. Okay, no, this is an incomplete question. Okay, I will explain you this question again, because here something is missing, that is this is incomplete question. I will repeat this question in the next session. Okay, because capital is not giving to you. If the capital is not giving to you, so how do you calculate your closing capital? Okay, so there is some printing mistake in this question, so I will discuss in the later. Okay, now move toward the next question. Monoposony is a situation. So what about the monoposony? First of all, what is a monoposony? So monoposony, this is when in the market there is an only one buyer. Okay, when in a market there is an only one buyer, but there is an many sellers. So in that condition, this monoposony is this situation we call monoposony. So here is what monopoly situation, where there is a large number of seller and one buyer with a homogeneous product, isn't it true? Or where there are the large number of buyer and one seller with the homogeneous product? No, this is wrong, because there is no large number of buyer, only one buyer. Okay, where there are the large number of buyer? No, this is also wrong. Where there are the large number of buyer? Again, this is wrong. So this is our true, that is large number of seller but only one buyer with the homogeneous product. Okay, so A will be the right answer. Now next question. For the following statement, assertion is reason is given to you. The assertion is want a satisfying power of the commodity is called utility. Isn't it true? Yes, this is true. We already most of the time we have repeated from the 11 12 that a want satisfying power of the commodity is called as a utility. So this is true. Now the reason, utility may not have the characteristics of morality. So what do you think, this is correct? Yes, this is correct, because utility is a subjective concept and it does not necessarily align with the moral and ethical consideration. Like I will give you the example. Many of the people or the alcoholic having the utility or the want of this alcohol and the alcohol. So they want they when they drink alcohol, okay, so they get satisfied. So this is a utility, but isn't it this is good for the health? No. So that's why utility may not have the characteristic of morality. Anything which satisfy your need, that is a utility, in spite of that is they not include the morality. Okay, so here what will be the right answer? Option number A, because A and both are correct. Okay, now move toward the next one, that is normal demand curve slope. So you know that is simple question, but I am with this question within a what are the causes why our demand curve will be slopes downward. So we know that the answer will be downward. Okay, now what are the reasons? Because of reasons behind our demand curve goes downward, slopes downward. So what are the reasons? So first of all, there is due to the law of demand. Due to the law of demand, actually this state that the price of the goods whenever decreases, okay, so quantity of that goods going to be increases, and this will happen vice versa. So here the two variables, two things are going to in the opposite direction. Whenever the things are going to in the opposite direction, suppose your y-axis is and your x-axis is going through in the opposite direction, in that condition this will happen. That means our whatever the demand curve we have, they're going to be downward slope. Now the downward slope occur because of there are, why this happen with the price and quantity. So there are the things that is we have to discuss, because here you can see there is a price in the price and quantity. If there is a substitute effect, due to substitute effect this is happen, due to income effect this is happen, that means our demand curve slopes downward. Due to diminishing marginal utility, this will happen. When we are talking the substitute effect, so these are the price of, if the price of the product falls, the consumer may switch from the alternate option or the expensive alternate to the cheaper product. So that's why this all things are happen because of substitute effect. If our income is increases, so purchasing power of the goods also increases. So lower price increases the consumer purchasing power, allowing them to buy more and more product. And our diminishing marginal utility always say that the consumer buy more for the same product, and the additional satisfaction, that is your utility, they get from each extra unit decreases. So these are the reason, that's why our diminishing our demand curve slopes downward. Okay, now next question. For the following statement of the assertion and reason is given to you. So here the assertion is what? So assertion is given that is marginal cost and the differential cost do not convey the same meaning in all circumstances. And reason is behind of that the differential cost increase or decrease due to change in fixed cost. So here the assertion is true but reason is false. Why the reason is assertion is true? Because in marginal cost actually refers to the additional cost, isn't it? This is marginal cost is here nothing but your additional cost, okay? And this cost we incur for producing one more unit. If you purchase one more unit, that is your marginal cost, okay? And where the differential cost is refers to the difference in your cost and cost between two alternatives, between two alternatives. So these are two costs may sometime be similar, but they are conceptually different. So that's why when we are talking the marginal cost and when we are talking the differential cost do not convey the same meaning, because marginal cost is additional cost and differential cost is give the difference between the two alternatives. You give the value of two alternatives, okay? Now reason. So when we are talking about the reason, so differential cost is increased or decreased due to change in fixed cost. Isn't it true? Actually not, because it's not due to the change in the fixed cost. Actually it's depend, our differential cost is depend on our variable cost, because if we increase the unit of production, if we increase the unit of production, so variable cost is also increases, but there is no effect on our fixed cost. So this difference we cannot calculate on the basis of fixed cost, we can calculate with on the basis of variable cost, okay? So that's why this is our A is true and reason is not correct, okay? So here you can see A is true and for R is false. Now the next one, this is match the pair, okay? So first one, that is indifference curve, second one demand curve, and the perfect competition, then price leading. So you know that this is a simple question. Indifference curve, the curve which is convex to the origin, this is fourth one. Then demand curve slopes downwards to right, okay? So you can match with the fourth one. Perfect competition, when your price is equals to average revenue equals to marginal revenue equals to demand. Price leadership you can see in oligopoly. So you can easily, this is simple question but I have added because of your getting revision if you somehow you forget it. Now the next one, that is assertion and reason again. So first one, that is okay. So as a proportion of one variable factor in a combination with the fixed factor is increased, after a point the marginal product of the factor will be diminishing. So here you know this is a question from the law of diminishing marginal return, okay? Marginal return, okay? So in the assertion they said this is correct. They said that increase in proportion of variable factor in combination with the fixed factor will, so after a certain point they lead to diminishing marginal return. So here when we are talking about the proportion of what, one variable factor in a combination with the fixed factor is increases, so after the point of marginal product of the factor will be diminishing. So suppose if your variable factors is going to be increases, okay? So this will leads to your fixed factor, there is a possibility your fixed factor is also increases but little bit, okay, not too much. So in that condition when we are talking about the marginal product, that means additional, if we add one more product in our additionally in a factor. So in that condition, if we added 1, so it leads to diminishing the factors. That means if I consume, since suppose if I consume gulab jamun, to in each and every unit when I'm consuming, my utility and my satisfaction going to be downward. Okay, so that means what they going to be in a diminishing rate. Okay, increasing but in a diminishing rate. So that's why this proportion about the variable factor in combination with the factor fixed factor is increases after after the marginal product. Okay, like your this is your marginal product. Okay, this is your marginal product. So here they increasing but in a diminishing rate. Okay, this is the way. Now the reason is given beyond the level of optimum combination the input leads to this. So is this true? Yes. So reason is also correct, because certain point we get a satisfaction, beyond that point our satisfaction going to be negative or diminishing. Okay, so that's why the both statements are correct over here. Now next one, ABC, 3 statement is given to you. You have to find out which statement is true and which statement will be false. So first statement is giving that is a large number of buyer, and this is question from the economics. Okay, so large number of buyer and seller exist in the monopolistic market. Isn't it true? So yes, this is true, because in the monopolistic market we see there are the large number of buyer and seller. Okay, so this is true. Then next one, firm produce a differentiated product in the monopolistic market. Yes, for though no identical product are produced in the monopolistic market, so all the products which we see in the monopolistic market, they are the differentiated product, that they differentiate. Now the third one, that is free entry and exist form a characteristics of monopoly. So this is also true. In the monopolistic market there is a free entry and exist for the seller and buyer. Okay, so this is both these all 3 statements are true. So here is right answer will be option number C. Now the next question is consider the following statement is given to you, that you have to find out which one is the correct one. Now the option number 1, the demand for the necessity is inelastic. Okay, so for the necessity goods the demand is inelastic. This is true. I can draw with the help of diagram, because in the necessity goods, if I want particular things, or the food, water, or either you can say clothes, so these are the necessity good. What quantity we needed, this quantity is fixed. If either we increase our price, either we decrease our price. So that's why in that condition our demand will be inelastic. Here you cannot see there is any elasticity for the necessity goods. So this is true, this is correct. Okay, now the demand for luxurious is elastic. The demand for luxurious is elastic. This is true. When we are talking about the luxurious goods, there is you can see more flexibility. If you increase, this is your price, if you little bit increase your price, there you can see a large number of changes in your quantity demanded. Okay, so like your here there is example like your diamond goods. Okay, then car. So here there is if you see there is a price is decreasing. Okay, if it is declared in the budget, so electronic goods or the for the luxurious goods, if the price or taxes will be reduced, so in that condition the more the people will purchase it. So here you can see the prices decreases, quantities increases. If the price is increases, quantities decreases. So there you can see the more effect on the elasticity. Now the next one, a product which have a several uses has an elasticity demand. So if the product can be used in multiple way, like electricity, like your coal, like your sugar, so this is a demand is elastic, because increase in price may lead to consumer to reduce its uses. So for the several uses, if we use several uses kind, you use your electricity in a multiple purpose. Okay, so if any product we use for the multiple purpose, in that condition you can see there is an elasticity of demand. So that's why all the example or the statements are true over here. So A, first, second, third, all are the true. So D will be the right answer. Now the next question, total production will be maximum when your TP will be maximum. So here I can draw, this is your MP and this is your TP. Okay, so TP is maximum when our MP is minimum, or either we can say 0. Okay, so option is given, the margin product is MP is maximum, MP never be maximum. Okay, because is like this. Okay, is continuously downward. Average production is maximum, no. Marginal product is 0. So yes, a margin, when your margin product is reached to the 0, in that condition your TP will be in the maximum level. So option number C will be the right answer. Okay, now the next one, that is assertion is giving, that is price reduction normally leads to an increase in demand for the commodity. Reason, price reduction leads to the entry of few buyers of the commodity in the market. So here this is question from the law of demand. Okay, so in the law of demand we can see, that is when we are talking about the price, if the price of goods fall, the quantity demanded of the particular goods is going to be increases. So when we are there is a reduction in the price reduction normally leads to increase in demand for the commodity. So yes, this statement is true, and reason is given behind of that. The reason is price reduction leads to entry of new buyer of the commodity in the market. So yes, why, whenever there is a new innovation, so here you can see whenever there is a new thing, innovations in the market, so the price of that particular product is higher, and gradually, because in that time there will be no competitors in the market. Okay, there is no competitor in the market. So here you can see, that is price reduction leads to the new entry or the new entry of buyer in the buyer of the commodity in the market. So yes, these are the true. So here the C, option number C will be the right answer. Now the next question, these assertion, again the assertion reason. So assertion is given, that is only one single primary ratio that measure the financial outcome of all the recorded business activity is ROI, return on investment. And the reason is given, that is in practices, however, the variations are also found in the ratio because capital and return are subject to the different interpretation by the firm. So here you can see in this question, assertion is about ROI. So yes, this statement is true. Why this statement is true? When we are talking about the ROI, return on investment, so this is your key of financial metrics, because ROI we use to evaluate our profitability of the firm and how efficiently we are using our fund for the investment purpose. Okay, that why this will lead to increase the overall business performance of the company. So that's why one single primary ratio that measure the financial outcome of all the recorded business, that is your return on investment, because it's find out your profitability, it's find out your investment, and this will leads to overall business performance. Okay, then the reason is given that in the practices, however, the variation are also found in the ratio because capital and the return are subject to the different interpretation by the firm. So here the reason is also true, because when we are talking about the capital, so the capital is kind of your investment, and return is kind of your profit which you will get from the investment, isn't it? So differently that it leads to the variation of ROI calculation. Okay, so what about your capital is your nothing but what you are invested in the particular project, that is your investment, and return is your profit which you will get from that investment. Okay, so that's why assertion is also true and reason is also true. But you can see over here, these are the assertion and reason is not get matched with each other, because assertion is not giving the exact reason, okay, which is given in our question paper. So both are the true but not correctly explained to each other. Okay, now move toward the next one, that is the current trading cycle practices by the stock exchange in India. Okay, so here is the T plus 2 day, T plus 3 day, T plus 4 day, T plus 5 days. So this is the way. Okay, so first of all, when we are talking about the T, what is the meaning of T2? So T2 is a settlement cycle which is used, means that the transaction made on particular trade day, that is T day. Okay, so I settle 2, that means T for 2, this is 2 day, that means T for days. Okay, so this is settled in the 2 day. So whenever we are making trading, or we are doing trading in NSE or in a BSC, so okay, so in that we generally use before we have that in we have T3. We previously in Indian stock market we use T3, T plus 3. Okay, T plus 3 settlement cycle. But after April 2003, the time will be they have decided that it was a shortened to T2 days. Okay, so this why they do this, because they want to improve the efficiency and liquidity in the market. So why the reason they do this? Because they want to improve the efficiency and liquidity into the market. That's why they change. First, in the prior days, there is a T before April 2023, they follow the T plus 3 days, but nowadays they shorten the period and they consider T plus 2 days for our practicing in the stock exchange in India. Okay, now next, the systematic risk. Okay, systematic risk does not include. Now what is the systematic risk? So you know that, sorry, systematic risk is affected to the entire market, and systematic risk is a kind of risk which we cannot control, which is not controlled by company. Okay, this kind of risk which is out of control by the company. Okay, so these risks are caused for the causes because of external factor. These risks are happen because of our external factors. And what kind of external factors? Like if there is a changes economic condition. Okay, if you see there is a change in economic condition, if you see there is a political events, if you see there is a natural disaster, in that condition, because you do not control this kind of thing, so this is called your systematic risk. So you know that market risk isn't a kind of your systematic risk, because this is out of a control. This all market risk is depend on the external factors like a war, political decisions, economic conditions, natural disaster. Okay, internal rate of return. internal rate of risk. This is your impact on fluctuation of interest rate, your investment, especially the bond. So this is also your kind of your systematic risk. Okay, this is does not include, this is way does not include. So no, yes, it's true, I'm get confused. Actually, in the systematic risk, this is your market risk, which we include interest risk. This is your kind of systematic risk, and your purchasing power risk is also your systematic risk, because this is happened due to inflation. Okay, inflation. Okay, and but your financial risk, it is your factor of unsystematic risk, because this systematic risk controlled by the company, because it affects to the internal factor of the company. Okay, internal factor of the company. So that's why option number C will be the right answer. Okay, because it does not include, it says, so market risks, internal rate risks, or the purchasing power risks, this is your kind of your systematic risk. This is out of our control. Okay, now the next one, that is, according to the Walter model, firm should pay 100% dividend. He said, in the Walter model, he said company should pay 100% dividend if when they pay 100% dividend. So first of all, you have to understand Walter dividend model. In the Walter dividend model, this decision to pay the dividend actually is depend on the relationship. And now what kind of relationship they? So the relationship between the ROI, return on investment, and cost of capital, that means your K. So this is your return, this is the relationship between the R and your capital. Now if suppose your R, that means return on investment, is greater than your cost of capital, in that condition you have to, or the firm should retain earning. Okay, and either they retain that earning, either they reinvest, okay, either reinvest, isn't it? Or if suppose the return on investment is less than the cost of capital, in that condition what you have to do, the company should distribute his all the earning, or 100% of earning, as a dividend to his shareholder, because reinvesting all the generated a low return than the cost of capital. So that's why they decided whenever a return is less than the cost of capital, in that condition Walter said that you have to pay, company should pay 100% dividend to its shareholder, because they do not have sufficient money to retain with self. Okay, and if suppose your R is equals to your K, cost of capital, in that condition you haven't see any kind of difference. So if you cannot see any kind of difference between your paying dividend or in retained earning, as in that condition both the option, either you pay the dividend, either you retain it. So it's all the option is opens to you. Okay, so here this is the what will be the right answer. Option number C will be the right answer. They ask, in the process of delegating authority, the superior delegates, options is 4 options is giving to you as usual, which is asking you a question paper. So first option is authority and the responsibility. Option number B, responsibility only. Then option number C, authority only. And your option number D will be the responsibility and accountability. So student, first of all, understand what is a delegation of authority. Okay, if you know the meaning of the word, and if you know the what are the process behind of this delegation of authority, if you are very well aware and you well prepare your all the syllabus and most important topics are really important. I will be back with the new video maybe tomorrow with the most important topics which is most frequently and most expectedly asked in your question paper of the June attained. Okay, so student, first of all understand what is a delegation of authority. Okay, so actually in the delegation of authority, a superior person or superior authority passes an authority to its subordinates. Okay, so that they can carry out a specific task, isn't it? So whenever we are talking about authority, whenever we are talking about the responsibility, whenever especially when we are talking about the responsibility, this word, okay, so the responsibility remain with the subordinate to perform the task, only with the subordinate. Okay, and whenever we say the another thing that is which is asked in this, that is accountability. What is the meaning of accountability, student? Accountability ultimately remain with the superior. So the responsibility, accountability, those both are the words are for the superior. Okay, so the superior cannot delegate the responsibility and the authority, accountability, and whenever in the they are still accountable for outcome of their teams. Okay, so authority is delegated, yes, responsibilities is assigned, accountability is retained by the superior. Understand? So here, what do you think? What will be the right answer? I have explained all the words, all the meaning. Now I am expecting that you have to mark your question answer in the chat box. Okay, and tell me what will be the right answer for this particular question. So now this is a time you have to be practice more and more questions, isn't it, student? So I am giving you 30 seconds, okay, and you have to mark your answer. Am I clear, student? Tell me, can I repeat this? Okay, I will explain these things again. Okay, whenever we are talking about the delegated authority, it means that when superior passes on authorities to a subordinate to fulfill the particular task. Okay, whenever we are talking about the responsibility, it's only stick with it's remain with the subordinate. Okay, responsibility it's remain with the subordinate. Okay, whenever we are talking about the accountability, so accountability it's remain with the superior. Okay, now what is a delegating authority? When superior and subordinate both are involved, right? So whenever they are talking about the process of delegating authority, it means that it's a combination of authority, it's combination of superior work and the subordinate help. Okay, so whenever we are talking about the responsibility, so responsibility, it's a kind of thing which is assigned, and whenever we are talking about the accountability, this word, it's related by the superior. Okay, and the word authority, it's what? It is delegated. Okay, so that's why option number C will be the right answer. Understand? Okay, hope so. In future, suppose this question will be asked from a delegation authority, I know you will mark 100% accurate answer. Okay, can I move toward? Yes. So student, okay, so moving toward our next question, and this question is really important. Again, this is from the topic of HRM. Okay, so here assertion and reason is given to you. Okay, assertion, I'm reading the assertion. Without coordination, people would lose sight of their role within the total organization and be tempted to perceive their own interest. Okay, now I just according to the option, we just need to find out which statement, assertion or reason, are correct or incorrect. That's it. Okay, now reason is giving, that is coordination is a process of integrating the activity of separate department in order to perceive the organization goal effectively. Okay, now okay, let's discuss assertion. First of all, he used word without. Because he used this word without, that's why the whole statement assertion is going to be true, that is correct. Because what he want to say, without coordination, if the peoples are not coordinated, organization, department are not coordinated, still people without coordination, if people are not make a proper coordination with the organization and with their work, with their along with their department, so what happened? People would lose the sights of their role. Isn't it true? Yes. Okay, so here without coordination, individual, you can say the department, okay, may operate in, they leads to confusion, they leads to duplication of words, or to pursuits of the persons, or they lose the departmental goal rather than the organization goal. Just focus on the departmental goal, not the organization. They are not focusing on the organization goal. So the coordination helps the organization to ensure the alignment and unity of direction, isn't it? So that's exactly, that is in our assertion. Without coordination, people would lose sights of their role within this integration of activity. Yes, integration of different department. That integration ensure the all efforts are aligned with the overall goal of the organization, isn't it? So this is coordination is a process of integration and of activity of separate department in order to pursue the organization goal effectively. So coordination play a very important role for the growth and development of the organization, isn't it? So yes, this statement is also correct, this statement is also true. That's why both the assertion and the reason are correct. So what will be the right answer according to you? Yes, option number A will be the right answer, students. Okay, if you have any doubt you can ask me in chat box. Okay, can I move toward next question? Yes. Okay, now next question, students. Again, this whatever the question I'm taking today, it's from the specific unit of HRM. Okay, so now when a process undergoes a change due to re-engineering program of the concerned employee also change. Okay, now the question is the options is qualification, designation, job profile, job experience. Now re-engineering. Now whenever we are talking about the re-engineering program, this is what? This is often implemented when organization want to improve efficiency, isn't it? They want to improve efficiency, they want to be streamline. Okay, streamline processes and also updates operations. All this will be happen within an organization, Understand what is a re-engineering program? So when a process undergone a change due to re-engineering program of the concerned employee also change qualification, designation, job profile or job experience. So what do you think, what will be the what they needed? What they needed first, that is qualification. Whenever we are talking about the qualification, this is, what does it refer? It's talking about educational background, isn't it? So isn't it education background, is it helpful to re-engineering program? No, not exactly. Yes, somehow, but not. It's not may lead to change due to the re-engineering, because education is just about the qualification is about the education background, or you can say the skill, whatever the skill is required for the specific vacant place, or the you can say job. Okay, either skill, isn't it? Now the next one, designation. We are talking about a designation. What does it mean? Designation, is it what? It is a title. Yes, it is a title of a job. What is it? It is a title of a job, and title of the job are may not exactly, but maybe change in some cases. So basically the focus here is on the change in the role itself. Okay, job title is on the change in the role itself, not it's concerned with the re-engineering program that will leads to the progress. Okay, now we have a job profile. Now student, what is a job profile? Job profile, job profile, it refers to the specific duties. Okay, not only the duties, also responsibilities, isn't it? Responsibilities, and also the requirement associated with the particular role. And when the process undergoes in re-engineering, it's often involved changing what employees are expected to do, what employees their responsibilities, and how they perform their task, thereby changing their job profile. So the job profile is the best option, because job profile, it's for the specific duty, it's a kind of responsibility, it's a kind of how they perform, how the employees are performed to do a specific program, to re-engineering the program. So job profile is the right answer. Now we have another option. Understand this option. Options are important. Job experience, because they there is a minor difference between the options, so we get confused. If you're clear with the option, you can choose the answer. Job experience. What is the job experience? Experience, it means the experience is gained by the employee over a time, and which is not necessary to alter by the re-engineering through its might affect the employee overall experience. Understand? So the right answer for this question, student, what will the right answer? Option number C, job profile. Okay, okay, then moving toward the next question. Again, two statements is giving to you, student. Now you have to find out which one is correct. Okay, statement number 1, sound policies do not help in resolving intrapersonal, interpersonal and intergroup conflict. Okay, next statement, the Delphi technique is named after the ancient Greek philosopher Peter Delphi. So yes, this is true. You know that this is what? Let's see. Okay, now we get confused. It's not philosopher by the Delphi. Both the statements are incorrect. Look over here. First thing, that is sound policy. Do not help. Do not. Okay, word do not. Not help in resolving intrapersonal, interpersonal or intergroup conflict. Now this is incorrect statement, because sound policy are actually play a very crucial role in resolving the conflict. Actually he used the word do not here, that's why this option is incorrect. Actually sound policy play a very crucial, very important role to resolve the conflict, and this conflict, it's not specific to the any particular thing. It may be an intrapersonal, it may be an interpersonal, or it may be an intergroup conflict. Okay, so well designed policies always provide a clear guideline, expectations and procedure that will help to resolving the conflict at all level. So it may be intrapersonal, it may be a interpersonal, or it may be a intergroup conflict. So it doesn't specific to particular thing, students. Yes, so sound policy, again I am repeating, sound policy play a very important role to resolve the conflict, and that conflict is not specific to any level. It's resolved, it's having the capacity, it's having the power to help in resolving the conflict at all level. So that's why, because he used specific do not, that's why this statement is incorrect, student. Okay, clear? Okay, can I move to the next statement? Yes. Now, Delphi technique. Yes, you know that what is a Delphi technique. You have heard this name, Delphi technique. Okay. Now, student, Delphi technique is named after the ancient Greek philosopher Peter Delphi. No, Delphi technique is actually named after the ancient Greek, not philosopher, student, Greek city Delphi, which having the name of Delphi, which was known for, this city is known for oracles, isn't it? And this Delphi technique, it's a method which is used for gathering expert opinion, isn't it? And this expert opinion helps to reach the organization, that will helps to reaching a conscience. Understand? So Delphi is obviously ancient Greek city. Its name Delphi technique, it's come not from the philosopher, it's not a name of any Peter Delphi, it's actually the name of Delphi city, and this city is specially for the oracle. And in whenever we are studying the Delphi technique, so Delphi techniques, it means this method is used to gathering the expert opinions. Okay, and this expert opinion helps to the organization to reaching its conscious good decision and for the development. Okay, ultimately this all the things. So here both the statements are incorrect. Okay, so both A and seconds are the incorrect statement. Okay, student, can I move to the next question? Yes. So the next question, which of the following is a human resource model? Which of the following is a human resource model? Option number A, Harvard model. Option number B, system theory model. Option number C, Mac-George model. Option number D, Lawyer and Porter model. Student, human resource model. Human resource model, it's a model of Harvard model. So option number A will be the right. Now understand why. Harvard model, this is a model which is widely organized for human resource management, for specifically for the HRM, and this model helps or basically focus on employee involvement, isn't it? And this is basically emphasizes the importance of aligned HR practices that with the overall goal of the organization will be achieved. And they basically highlight the various factors, and these factors are what they highlight. The factors, these factors such as stakeholders. Okay, they involve the stakeholders. Okay, they stakeholder interest. Okay, like a factors like a situation, they decide or they make a decision according to the situation factor. They emphasize on the HR policies, which will help the organization to follow a particular rule, okay, to be stick with that, okay. Then and also what the outcome they will get, isn't it? So that will affect to the employees behavior and organization performance, okay. So whenever we are talking about this is what Harvard model. So the Harvard model is basically for the HR human resource model, students. Understand? Now option number B. Option number B, system theory model. Understand why the system theory model is related to. Actually this system theory model, it's useful to understand the organization system, how organization working, okay. So it's actually to understand the organization, how they work, how they manage, how the systems are, the organization system. So this system theory belongs to this model, helps to the individual to understand the organization system. But can in this question they are talking about the organization system? No, they are asking the question of human resource model. So for the human resource model, Harvard model is good, and Harvard model they specify the human resource model, okay. Now McGeorge model. So McGeorge model is give the idea of theories of X and theory of Y. That means no and yes. Actually this is for the employees motivation. This theory this give the employees motivation level, okay. It's not for the HR model. Now we have a lawyer and the portal model. So lawyer and portal model, they specifically focus on motivation and performance, okay, of the employee. Not actually this is your system theory model, your McGeorge model, your lawyer and portal model, these are the part of your HRM model. This is small part of, but HRM is a whole concept. When we integrate all these model, we will get a Harvard model, okay. Understand? Okay, if they ask a question from the system theory model, if they ask a question from the McGeorge model, so you can be able to answer this question, okay. Just fit in your mind. System theory model, yes, understand the organization system. McGeorge, theory of X, theory of Y, okay. Lawyer and the portal model, it's a motivation and performance model. So this is a way, if you learn this in this way, in a very shortest form or shortest word, so you don't need to learn all things. Just these are tips are important, and these tips will help you in your examination. Understand? Okay. Now moving this, so what will be the right answer? Option number A. Understand? Now match the pair question, objectives given to you again from the HRM. Then we have a function. So objective of functional, organization, societal and personal. Functional, when we are talking about the functional objective refers to evaluating the effectiveness of the different HRM function, like the performance assessment or evaluation. So this function you can match with the assessment, okay. Now organization is related to the employee relation, because in the organization objective is to focus on creating healthy employee relationship, which foster or which helps your organization and foster the productive work environment within the organization. Okay, so you can match the organization with employee relation. Societal, so societal, it's kind of union, isn't it? So union management relation. Actually, the societal objective is to involve the managing relationship between the labor union and the management that will ensure the fairness and balance in societal term. Now the personal, it's compensation, because personal objective behind to join any organization to get a compensation, isn't it? If I'm working some branch or in a department, so why I'm working over there? Because I'm getting some kind of compensation whatever I'm doing over there for my efforts. Okay, so that personal objective is to relate it to individual employees goal, on which one of which is the proper compensation and rewards, isn't it? So what will be the right answer if you match A with third one and B with first one? So option number D will be the right answer for this question. Okay, can I move to the next question? Now this is the way you will get all explanation. Okay, and this all the PDF I am sending in the group. Okay, if you join that group, you will get all the details notes in the group. Okay, that will help you for your preparation. Only doing the questions PYQs is not sufficient. Understand each and every options which is given in your question paper, and this option will lead to the create a next question. Okay, now next question, student. Excessive reliance on internal recruitment by an organization would lead to the serious problem of option number A, reduce the job performance, option number B, internal resistance, option number C, lack of motivation, option number D, labor turnover. So student, excessive reliance on internal recruitment by an organization will lead to a serious problem. Yes, it's create a serious problem, because this serious problem, it's an internal resistance. Suppose if organization hire only internally, so what happened in that case? Employees of the other or the internally employee may feel the overlooked, they feel restricted. So that's why, and this restriction may leads to their may affect the career progress. So this can lead to the resistance for those who feel that opportunity of advance are limited. So if any organization only recruit to the internally, so no one, the outsider, will be interested. They feel they feel like there is no opportunity, they feel limited. So the decision making process is going to be biased in that organization, understand? And this will reduce the job performance, like that is will affect the direct consequences, or which lead to the direct consequences of the internal recruitment. So internal recruitment can often lead to be better performance due to the employee already been familiar with the organization culture and the processes. But the lack of motivation, this lack of motivation, option, that is this lack of motivation, this is option is given to you, the lack of motivation, this is what, this lack of motivation can result the lack of career advance opportunities if employee feel their practices rather than the excessive reliances on the internal recruitment itself. And whenever we are talking about the labor turnover, so the labor turnover, it might actually decrease if the employees are potential for the achievement. Okay, so rather than increasing, which could happen if they feel there are limited opportunity within the company. So thus internal resistance, this option number B, internal resistance, it's most likely result of excessive reliances on the internal recruitment. So employee may feel organization is not valuing the external perspective or the diverse talent. Okay, so excessive reliance on the internal recruitment, if any organization give the excessive reliance to the internal recruitment, so that's why externals are not gets involved, they not feel that this organization having the opportunity for us. So this is what leads to the problem they are leads to the internal, this is not actually reducing the job performance, it's not right answer, it leads to internal resistance. Option number B will be the right answer, not reducing the job. Okay, yes, obviously, yes, it's reduce the job opportunity for the externals, for external, but it's not specific. In this option, if we choose option number A, when it's specific to the external, because they are giving the importance to the internal, and this option is not specific about either that they talking about the internal or the external. So you have to be conscious when you mark your answer. Reduce the job performance, what is about the job performance? We're not specific with the, isn't it talking about the internal or the external? But the option number B, internal resistance, yes, this will happen if any organization give the excessive reliances to the internal recruitment. So the option number B will be the right answer, that is internal resistance will be the right answer, student. Okay, then moving toward the next question. Name of the bank and the taglines. Okay, it's a simple question. Bank of Baroda. Bank of Baroda is India's international bank. So you can easily mark option number A with the third one. Okay, yeah. Then Bank of Rajasthan. Dare to dream, isn't it? So B is matched with the 1. Okay, then HSBC, it's what? Tell me. Okay, the full form of HSBC, which is the bank name, what is the full form of this bank name? You have to write it down in the chat box. HSBC, the world's local bank, Standard Chartered Bank, Young Right Partners. Okay, so what will be the right answer? Option number B will be the right answer, students. Okay, I don't need to explain too much in this question. Now moving toward the next question, we have bank and the slogans. Okay, these are the important. State Bank of India, pure bank, nothing else. Pure bank, State Bank of India, pure bank, nothing else. Option number A, 3. Citibank, let's go it done. Option number 4, let's go it done. Okay, then Allahabad Bank, a tradition of trust. Okay, C with the 1. Okay, so you can easily mark the option number C. Okay, the Bank of India, relationship beyond the banking. Okay, yes, moving toward the option number C will be the right answer, isn't it? Okay, moving toward the next question. Okay, uh, two statement is given to you. You have to find out which is true and which is false. Okay, I'm taking little bit faster. Statement number one: an electronic fund transfer system that operate an deferred net settlement basis which settle transaction in batches is refers to the NEFT. Then the statement number two: the risks that bank face while trading in government security is called as trade risk. Okay, now to the first one, that is NEFT. What is the full form of NEFT? National Electronic Fund Transfer. Okay, what is it? It's indeed and the electronic fund transfer system that operate on a deferred net system, DNS, deferred, this one, deferred net system. Okay, DNS. Okay, and this is means that to settle the transaction in batches at a periodic interval rather than the real time. Okay, so the periodic interval is important. Periodic interval rather than the real time. Okay, so the electronic fund transfer system that operate a deferred net settlement basis which settle the transaction in batch is refers to the NEFT. Yes, this is true. Okay, so this is true statement. Statement number two: the risk that an bank face while trading in the government security, it's called trade risk. Isn't it true? No, this is false. This is not trade risk, student. This is what? This is market risk. Either we can say the market risk, sorry, it's not E. Either we can say price risk. Okay, so the risk that a bank face while trading in government security is called as a trade risk. No, it's not a trade risk, student. It's a market risk. So the risks faced by the bank while trading in government security, it's and the market risk. Either we can say the price risk. It's not trade risk. Now the question is that what is a trade risk, ma'am? So trade risk, it is a risk which is related to the particular business internally. But when we are talking about the market risk, that risk is the bank face while in trading, because government securities are the external factors in a macro level and trade risks are the internal factors, internal things, internal business risk, which then this trade risk, this business risk, it's controllable by the organization, but the market risks are uncontrollable, student, isn't it? Okay, so statement number 2 is false, but statement number 1 is true. So what do you think? What will be the right answer? Tell me quickly. Yes, option number C will be the right answer. Understand? Okay, now the next question, student. When a banker, statement again, two statement is given to you. I'm taking a little bit faster. Okay, because these questions are simple questions, no need to greater explanation. Okay, statement number 1 A, that is when a banker provide a locker facility to customer, the relationship between them, it's of the bearer and the bailee. No, bearer and the bailee. Do you know the relationship? What is the meaning of bearer and bailee? Understand, student, whenever banker provide a locker facility to customer, the relationship is not a bearer bailee, instead it is a lessor and lessee. Okay, so the relationship is the lessor and lessee. So bank is essentially leasing the locker to the customer. So the concept of, whenever the concept of bearer or bailment, The bailment is applied when you make a transaction, when you transfer the goods, from the one person to another person. So whenever the goods is involved, okay, so the goods are transferred to the belly of the safekeeper. But the locker facility, it's involved the leasing, like a agreement. It's not a simple bailment, it's agreement. It's a huge thing, it's a huge responsibility. Okay, so here first statement is incorrect, completely incorrect. Now next statement, debenture are governed by company law. Debenture are governed by the company law. Isn't it true? Yes, this is true, student, because debts instrument issued by the company, this debt debenture instrument issued by the company when company needs, they want a capital, they want to raise the capital, isn't it? And this will help the organization to manage the things, and this will be helps to regulate the fall under the provision of companies acts. So that's why debenture are governed by the company law. This is true. Okay, so here what will be the right answer, students? Yes, B is correct, but A is wrong. Understand? Okay, yes, moving toward the next question. Now, the interest rate at which bank can borrow fund in marketable size from other bank in India, in Indian internal bank market. Option number A, repo rate. Option number B, hard currency. Option number C, LIBOR. Option number D, MIBOR. Okay, now what is the full form of MIBOR? Mumbai Interbank Offered Rate. Mumbai Interbank Offer Rate. Okay, so understand the question. Interest rate at which okay, at which bank can borrow fund in the marketable size from other bank in the Indian interbank market. What does it mean? What does it mean? Who do this? Okay, now understand the options. First of all, if you understand the options, you can easily mark this question. Now, what is the repo rate, students? The rate which is decided by the RBI. Simple. Okay, and this repo rate, it's explained, this leads to the money to the commercial bank against the government security, isn't it? That is the repo rate. Okay, is this repo rate related to the interbank borrowing? No. Okay, you got your answer. Now option number B, hard currency. Whenever we are talking about the hard currency, are kind of stable or widely acceptable for the trade and the investment. It's not an interest rate, student. So how it will be a hard currency? So here not repo rate, not hard currency. Now we have a LIBOR. Now I told you what is the full form of MIBOR, Mumbai Interbank Offer Rate. Now what is the LIBOR? LIBOR full form is London Interbank Offered Rate, which is the rate at which bank leads to each other in international market, not specific to India. Now if LIBOR is not specific to India, but in the question you can see the Indian interbank market. So you can understand, and now I know that now you are clear with this question and you are clear with the right answer. Okay, so what will the right answer for this question? MIBOR, Mumbai Interbank Bank Offered Rate. Okay, so MIBOR will be the right answer, student. Moving toward the next question. These questions are I'm taking quickly. Lead bank system was started on recommendation of Raja Chalan Committee, Kellarkar Committee, Nariman Committee, or Malhotra Committee. Lead bank system. First of all, this bank system, understand one by one. Okay, one thing, each and everything is important. Lead bank system is introduced in India. When? Is introduced in India 1975. This is important. Okay, and this is based on the recommendation of Nariman Committee. Okay, you got your answer. Now what about the other options? So now understand the objective also. What is the objective of the Nariman Committee objective? Okay, so whenever we are talking about the objective was to enhance the banking penetration. So what they want to do, why they make this committee? This committee will helps to enhance the, what is the objective behind? To enhance the banking penetration. What is banking penetration? But penetration is where in rural area, in rural, or we can say remote areas. Understand? Lead bank system is a recommendation of Nariman Committee, was introduced in India in 1975, and the objective of this committee is to enhance the banking penetration, specifically in rural and the remote area. Clear? Okay, isn't it clear? And now what about the Raja Chalan Committee? So Raja Chalan Committee is focused on restructuring. What is it on? Restructuring India's tax system. Who is the father of India's tax reform? So Rajan Chalan is a founder, is a father of the Indian tax reform. So Rajan Chalan Committee is specifically introduced there, restructuring the Indian tax reform. Okay, and this will lead to the reform in the tax system. Then the Kellarkar Committee, they recommended on the public sector reform in public sector undertakings. Okay, and that will helps, and also in the fiscal management. Write it down, student, because these are all are important. Then Malhotra Committee. So Malhotra Committee is focused on what? Malhotra Committee is focused on reform. All the committees comes for the reform in insurance sector. Understand? Insurance sector. Okay, Rajan Chalan Committee make a reform in the Indian tax system. Kellarkar Committee make a reform in public sector undertaking and also in the fiscal management. Okay, Nariman Committee on the they focus on the reform in the leading bank system. They reform in the banking penetration, specifically for the rural and the remote area. Malhotra Committee make a reform in the insurance sectors. Understand? Yes. So now what will the right answer, students? Nariman Committee. Okay, Nariman Committee is the right answer. Okay, moving to the next question. We have, according to the 14th report of the second ARC. Now, what is the full form of ARC? ARC? If you don't know, you're not able to answer. ARC is a administrative reform commission. Administrative Reform Commission. Okay, so which of the following are the core principle of the financial system in India? Okay, now options is given to you. Option number A, focus on result. Option number B, adopting modern financial management practices. Then option number C, budgeting to the realistic. D, transparency and simplicity. Students. Okay, now we have to select which option will be the best one. Okay, so student, whenever actually the focus of second arc is on the financial management system, and this financial management system outline the several core principles, and these principles is for the improving in the financial system in India. What are these principles? The first principle is that focus on results. What does it mean that? Focus on result. This emphasize the needs for effective outcomes, which is oriented financial management, and that will ensure the resources are utilized effectively, and if the resources are utilized effectively, that will lead to help them to achieve the desired results. So focus on your result, not on anything else. If you focus on your result, so you will work according to that. You can manage everything. Okay, and this will ensure the results. Okay, then adapting the modern financial management practices. What does it mean? It helps to the organization to report the stress and the importance of updating. Also adapting the contemporary financial management methods, and this will leads to include the use of the better technologies and better governance. So that is adopting the modern financial management, and this modern financial management is what? Use the better technology, use the better leads to the better governance. Okay, now budgeting to the realistics. So budgeting to the realistic, that means to ensure the financial allocations are based on the practical assessment rather than the optimistic inaccurate projects. Okay, so work on realistic thing. Then transparency and the simplicity. So this is the report highlights are needed for the greater transparency and simplicity in financial management processes, and that will lead to the making them more accessible and understandable to stakeholder. Understand? So this is what in the 14th report of second arc. So all of these options are correct. So option number D will be the right answer, students. Okay. Now next question, capital adequacy norms helps the bank. Option number A, for strengthening the capital base of the bank, or B, for sanctioning more loan. Now capital, whenever we are talking about the capital adequacy norms, what does it mean? First of all, capital adequacy norm, which is given in Basel norm 3. First thing, okay, and this is designed to ensure the bank to banks maintenance enough capital to absorb the losses. That is capital adequacy. and this will lead to continue to operate, and thereby this will help the bank to strengthen their capital base. Okay, so for strengthening the capital base of management, not for sanctioning more loan. No, they are not in the, this is not in the capital adequacy norms, not directly on sanctioning the more loan. Actually, in fact, is a norm imposing the limit on how much a bank can lease to based on the its capital base. So bank need to maintain a certain ratio of capital risk weighted asset. Okay, and that to which could limit the ability to sanction the additional loan if their capital base is insufficient. Okay, so here is correct option will be A is correct and B is incorrect. Okay, done. Okay, can I move toward the next one? Okay, now the concept of this one is the last question, then we are winding up to the session. Okay, the concept of mutual fund was started with the unit scheme of Unit Trust of India in, so this is simple question. Unit Trust of India started in 1964, but where the concept of mutual fund was started with the unit scheme Unit Trust of India in 1974 India, in 1982 Canada, 1964 Chicago, 1964 India. So right answer will be 1964. Now understand, in 1974 India is not correct year for the launch of mutual fund in India. Okay, in 1982 Canada, the mutual fund is excited to the globally well before the 82. Okay, Chicago will be not right answer. So right answer for this question, student, option number D, 1964 in India. Okay, so we have done here lots of questions. Okay, hope so you enjoy this question, understand each and every concept, each and every options. Okay, and if this is the way, if you prepare yourself for the examination, you are doing practice like this, so I am giving the guarantee that you will definitely crack your examination with a good percentage and a best percentage. Okay, and that's it, more important. It's not just clearing the examination is not important, it's not the things which we have targeting over here, and we are focusing on for the GRF. And if you are clear your GRF, so it will lead to be your for the PhD. Okay, so do it better, do practice every day. Okay, and I'll always be there for you, and best of luck to all of you. Okay, okay then, see you.